Good morning, everybody. Good morning. It's been a minute. Let's get into it. How's everyone doing? Last week, this week, dealing with all the market volatility. Market's coming up a little bit here. Good morning, Corn Trader. Good morning, Chris. Morning, Dijan. Morning, Andre. Super Beef Patty. TK. Morning. Gordo. Good morning. T-Straight. Good morning. Good morning, Transgressive. Chemist is in the YouTube chat. Man, I've been dealing with some stuff at home. Haven't been able to put out a video or go live. Rate cut. Well, I'm here now. Sheesh, amnesia. All right, we're going to take a look at the markets. Is it rocket time? It might be rocket time. We'll talk about it. All right. Hope everyone's had a good weekend. Good Monday. We're looking at Bookmap right now. See if there's anything going on. Good evening from Portugal. Nice. What part of Portugal? Lisboa? Morning, FT. Morning, Savage. All right. Let's take a quick look at just the heat map. We'll get into the indices and give a kind of idea of what I think is going on here with the markets. We are getting a rebound. I mean, let's be real, people. The market was going to bounce. The market was going to bounce. So now it's really to know whether or not it's going to be sustainable. So we're going to map out some of those key levels. Zoom in here.
In the geopolitical front, a spokesperson for Hamas armed wing al-Qassam brigades has called for escalation across all fronts.
So it looks like a pretty broad-based rally today. And it was the other day, too, on Monday, where basically the 11 sectors were up. I'm almost certain all the 11 sectors were up in the S&P 500 yesterday. And today we're having some follow-through on that broad-based rally. The market cap, the big market cap names look to be all healthy right now. Tesla, I think, was really the only name that got hit going into yesterday. We'll pull that up in a little bit here. Let me stay focused. So this is the heat map. Let's look at the index watch. The index watch will look at the S&P 100. The S&P 100 will give us the largest market cap names in the S&P 100. And we're talking 81 advancing names, 83 advancing versus 17. Okay. And the one that's, down the most is a consumer staple. So this is by any means a risk on type of rally so far. We have a correlation to the upside. A very interesting chart was posted on Twitter just the other day going into this week, and it had to do with HYG. And HYG, some people notice it, some people didn't notice it. It's one of those things that you got to kind of keep paying attention to. I'll pull up, maybe if I have the chart, I can show you. No, I'll pull up my Twitter post so you can see. But we talk about HYG, like high yield, as the, smart money. The bond market's the smart money. The dumb money is like the retail, trading the S&P 500, right? Which, it's just a saying. It's not necessarily true. But the bond market has always been known to be like more that smart money. And one of the things that we noticed was, I'll pull the chart up right now.
You had CEO saying that he remains skeptical about small SMR nuclear powering data centers.
Need my coffee. Okay. You had smart money, so we'll just call it HYG, right? On the day that we were seeing some pretty significant downside, this was on, when was this? This was April 19th. The SPY kept on going down, but HYG actually bid up, and it finished up on the day. So you had this divergence, and the last time we really saw a divergence like that, it doesn't mean that the rally is going to be like this, by the way. It's just showing, hey, smart money put in a higher low, dumb money put in a lower low. What's smart money trying to tell us? I'd have to find the updated chart. I'm not going to do it right now. But clearly, since that point, we've had 2 now trading days of SPY moving up, and HYG has continued to move up here too as well. It's being led right now. Semiconductors are kind of leading the pack. Semiconductors, though, when I look at this chart, take a look. These last 2 days that are trading up are still trading within the prior, prior trading day there, where we saw that kind of bloody water, right? So even NVIDIA, right? So we'll go to NVIDIA, and NVIDIA had a massive break here, and we're seeing a little bit of a reflexive bounce. This is completely normal type behavior in markets where you get these big flushes, and then they bring back in. And you can see we're trading still within this prior candle. Now, the reason why I'm saying that is because I can look at this SPY, for example, and I could zoom in, and I can say, hey, remember when we had that outside trading day here? And we said, hey, if it breaks above it, that negates it. But if it confirms a bearish reversal if we break below it. Okay, well, what happened? Well, we gapped up. We had an inside trading day, an inside trading day, and an inside trading day, all within this candle until we saw some eventual follow through. Now, I don't know if that's going to be the same way played out for NVIDIA or these other names, because we've had, it was what? 1, 2, 3, 4, 5, 6 down days. And 6 down days is very rare in the S&P 500. There's another post on Twitter and even on the last YouTube video where we talked about losing streaks, and it was 5 days is typical. Like we've seen it 12 times in the last 5 years where we saw 5 or more down days. So 12 times in the last 5 years. And then in the last 5 years for 6 down days, it was 3 times, now 4 times, right, in the last 5 years. Now, what's even more rare is 7 down days, right? And this is, can you make trading decisions based off of this? No, not really. Maybe you can, understanding that, and you'd be like, yeah, we'll probably play for a little bit of a bounce. It makes sense. Sitting at around highs of the days today, by the way. So if we went down another day, that would have been, there's only been one time in the last 5 years where we had 7 down days, and that was February 20th to February 28th. That was, I believe, the start of the pandemic crash, the very beginning of it. And we didn't get that. We're bouncing. We're recovering. Markets are rebounding, people. Woohoo. Okay, but where do we rebound to? I think that's a big thing. We'll pull up some of these individual names here too soon. So where are we rebounding to? We'll pull up Gamma. We'll pull up all these levels. Let's first start off with the S&P 500 on the SPY. So one of the things that we called out was I'm going to just pull up this chart too again. Second. Come on, load. What's going on here? Log in. What the heck? Oh, here's that updated chart, by the way. Yo. So here's that updated chart, how we called that divergence out, and we saw it, playing back out to the upside. Pretty cool there. Okay, but I want to show you this right here. Okay. So this was coming into the quarterly expected move for the S&P 500. That's that dashed line. So during all that craziness, we had to point out and call out, the reality is we're trading outside of the monthly expected move. So the higher probability is that we come back up to it or trade around that after seeing that type of a move. And we're kind of doing that right now. It doesn't, the higher probability meaning just if you look at just standard deviations, right? Or a distribution curve, statistics, it's just probabilities. But at the same time, we're pulling into an inclining monthly 5 EMA, which we tagged, and we were pulling into a quarterly expected move. So if any point you were thinking like, hey, should I be fearful or should I, try to buy into this, dip? These would be like some bigger levels that you would be paying attention to. The very same thing happened in IWM. If you remember correctly, and you can go back to the day, the video of the day, we said, we're talking about, okay, well, where's the opportunity? You can go back and see, I was talking about IWM. I don't have the update. I don't have that chart anymore. But basically the quarterly expected move, I'll just bring up what it looked like, but it was over here, this right here where people were freaking out. This came literally perfect to the touch, the lower quarterly expected move. And the other markets were not doing that at that time. So in terms of like, hey, where, is potential opportunity, that was that at that point. And now, we're looking at the S&P 500 and we're coming down into these levels. Doesn't mean that we can't see more sell side, but because of the quick break, because of the downside, could be because, CTAs are being triggered by hitting these key levels. Could be because we're in negative gamma territory. That's what we're seeing. Okay, so that's kind of what's going on here in the markets. We do have earnings season coming up. We have a lot of stuff on deck. Before the open today, we had GM, UPS, GE. I'm actually interested now to see UPS. How did it do? Did FedEx react in any way? FDX is one that I've been kind of on the radar for. It's continuing this breakout there. Nice little move there. Lulu was one that I had. I don't have a position anymore. I got out on the prior trading day. I was just playing for a bounce outside of inside of a downtrend. Okay, so there's that. Tomorrow, after the close, we have Tesla, we have Visa, we have Enphase, we have TXN. So we have some big names. It's starting to really heat up here. Halliburton, JBlue. Oh, let's see JBlue. JBlue was actually a name that I was interested in, but it didn't really set up at the time. Yeah, so we keep on running into this resistance, but then earnings. So I wouldn't play it into earnings, but earnings brought it down here. Not the greatest look, but maybe if it tightens back up, we can watch that 7.5, something that I've been watching. So we'll get the expected moves for these names. Sorry, did I say tomorrow after the close for Tesla? That's today. I'm tripping out. I meant today after the close is Tesla, Visa. So we're going to get those expected moves tomorrow. Tomorrow after the close, we have Meta, IBM, Ford, Chipotle. And then we have Microsoft, Google, Intel. So we have a lot of stuff heating up here towards for this week of trade. So I know a lot of people are going to be asking about Tesla. And Tesla will get the expected move, and we'll kind of figure that out. Oh, what's up, Gianni? How you doing? Good morning, Too Sharp. Too Sharp. All right, let's take a look here at the market, more inch time frame here. We are outside of the opening range. Market keeps on putting in higher highs, higher lows. Looking good overall here. We're getting outside of these 0-date levels. Let's see if anything from a 0-date level changed, because it seemed pretty pinned here at 50.45, 50.40. So this to me is a little kind of concerning. Is because we're outside of that now, and they're really not reaching up further. So what's going on? Is it market net flow? Market net flow has been bullish all day right here. So we have a bullish divergence between the red line, green line. These are cumulative net premiums. And you can see we have convergence here too. That means S&P 500 is moving with market net flow, and it's moving quite nicely here. So this is one of those markets, once again, you wouldn't really want to go in and fade. We had a very similar type behavior yesterday. It was a little shaky at first. It turned gray, but then towards the end of the day, not really even towards the end of the day, and then it started to light back up again. So these are very bullish type trend days. It's like we've said in prior lives, this is where, it's going to look obvious when it's obvious. Anything on the economic calendar? We had some PMI numbers. That was a little bit earlier, almost an hour ago. New home sales, everything seems to be fine there. Everything as far as the market's response is what I mean. We have a 2-year note auction at 10 a.m., which is, an hour and a half or so. 2 hours. 40-day bill auction. I don't know if these are going to add too much volatility to the current market or not, but it's just worth noting. Services PMI 50.9 versus 52. 15th month of expansion. PMI composite 50.9 versus 52. All the market's response was pretty positive today, so good there. Let's take a look at Tesla, and then we're gonna go. Make sure to drop your tickers into the chat if you want me to take a look at them. Okay. Take a look at some individual names. The market keeps on flowing up. So really quickly on Bookmap, we are pulling into some levels here. This 50.97, 5100 level. Be aware, just be aware that overall context of the market, we are back above a 5-day moving average. What's it doing? It's declining still. The longer we stay above, it's better because it can start flattening out to going up. That is more positive. That's what we said. You really, if you want to be patient, is what you wait for. Now, would you chase into this going into the upper weekly expected move? I wouldn't suggest chasing into it. We're not too far off of the month-to-date lower expected move. You can see that we've came quite far back into that level. And we're not too far off the weekly now on day 2 of the trading week. Okay, with all kinds of earnings around the corner. Yeah, it's a 2-year auction at 1 p.m. Eastern Standard Time.
South African Central Bank saying the job to bringing in CPI to target is
that's 10 a.m. Pacific Standard Time. That lines up.
Saying smaller crop estimates risk to food prices in the medium term.
Hey Ruben, by the way, I still haven't looked through the
years.
The email
on services inflation. South African Central Bank saying that service inflation rising strongly, averaging 5% in 2024, and the path back to the inflation midpoint likely will be bumpy and protracted.
I'm dealing with all kinds of stuff at home. Health insurance crap that they dropped our health insurance for no reason. They said it'd be because he wasn't verified U.S. citizen. I'm like, dude, he was born in the hospital here in America. And then they cut our insurance. I'm like, okay, well then why, like, bring it back? Then they said, well, okay, we'll submit a ticket. It's been now probably 15 days, 10 days with no health insurance, and he's been having these like, I really don't know, man. I think they're potentially like little seizures. It's been a little scary, but he's doing fine. He's fine. So we've been trying to figure this out and trying to like rework it all, and they're just like it's a mess. It's a freaking mess. So I'll probably be expecting some gigantic bills in the near future. It's gonna be great. All right, so the S&P 500 is now outside of the weekly expected move. So we got to see that live, baby. We're here. Yeah, new dad, dealing with all this stuff. I know. Don't make it a big. It's not as big deal as it might sound. It's not like a full blown anything crazy. It's apparently more normal than anything. But yeah. Okay. So we're right there now. Give me a second here because I had a position on, so I'm probably just going to trim a little bit here as we're coming into the weekly expected move. I still think that it's possible that we come back to that lower monthly expected move. I think that's possible. I don't know about today or not, but right now we're just trading. We're trading, where the market's, priced in for the entire week. And I've noticed that there's a higher probabilities of breaking the upside than there is really the downside. But we'll see. We'll see if that's the case, So I had some positions in just a short-term leverage S&P 500. So I'm just gonna sell some of that into the upper area right here. I don't need to have this size of a position on.
Saying they see more planes grounded for engine issues in 2025 and 2026.
So let me do that really quick. I played it a little bit lower, and I took a decent sized position there, and it went against me for a little bit. Now it's kind of back up into the positive, and I'm just going to kind of reestablish the proper position size there.
Above its 1-month average. Advancers lead decliners by 3.4 to 1. VIX index trading lower by 4% at 1633.
Okay. Almost there. Yeah, I know, Taco. It's all good. It's all good, guys. It's all good. Everything's fine. The hardest part is just my wife. Like if the health insurance wasn't being an issue right now, everything would be fine. It's kind of like very like I'm not used to having my own health insurance. I've always went through my company. My company was literally the company that I worked for, dude. Their health insurance was friggin' crazy. My buddy,
for some time.
My buddy's child was going through.
Director Rebecca Jackson.
I forget exactly what it was, but it was a very, very, very bad situation, and they had to helivac them.
Equity exposures
and they covered everything, including all the like everything. He didn't, not even a cent. And that was like a big old ordeal there with our insurance through that company. And they made it, they made it like show like everybody like, hey, make sure you have the right health insurance and everything, because we will take care of you if it's all set up correctly, obviously. But yeah, hell of act, and then just months worth of work and stuff. It was crazy, and she turned out totally fine. But now I'm like, you know, self-employed, dealing with like, like I don't know all this stuff. Like it's all new to me, so I have to like ask people, and I have to like get like help with it, and then I get it all set up and everything's fine, and all of a sudden they say, oh yeah, no, he's not a citizen. What the hell, dude? How is that even possible? He was literally born in this hospital. How is he not a U.S. citizen? With this insurance, how is he not a U.S. citizen? What? What the heck? You know? What the heck? Yeah. Okay, we're back there. We're trading kind of around the weekly expected move. Now, yet last week when we traded at the lower weekly expected move, what did we say? We said it's typical, even if we bounce above, it's, where was it? I forget where it was. It was probably like around here, the prior week, right? It's typical that we come back in and we trade back in around it. And we kind of close right around the lower weekly expected move. Well, now you see we're getting outside of it a little bit, and we're kind of coming back in. Okay, we're outside of the daily expected move. We're underneath the lower. That is where we're at right now. We're gonna pull up some of these individual names because I'm interested to see where Tesla is, and then some of you guys are bringing up some good ideas as far as various names go here. So let's do that. Yeah, man, it is a racket. It's just like, man, dude, and then it's like you deal with somebody different every single time. And it's like you have to re-explain yourself. Oh my gosh, dude. And it's like I'm super calm and relaxed on every single phone call. And they're like, yeah, just call back in a couple of days. The reference number, it's still here. It's still here. The ticket's still here. I'm like, okay, but what do I do if there's a real emergency? Well, you know, there's a form you can fill out. Like, oh God, please. No, not another form. Not another form. Bro, just make a digital form. And I get it, because the old company that I used to work at, when there was escalations, dude, they piled up, and it was literally me and a buddy that had to go through all these escalations, and every single day, like this was the reality. I'm like, why isn't this automated? Why can't we fix this? We have the most like relevant technology, up-to-date technology as far as like network infrastructure, but yet we can't figure out back-end stuff, dude, to make it automatic. It was so annoying because we would have to feel the pain of like various customers or agents that we'd have to work with. Like, dude, please fix it. Like, dude, I'm trying, man. And it's like, and then we would get it done, it'd be fine, but it would take just an exorbitant amount of time, and then they're kind of left on the back burner. I hated it. I hated that. That was the worst part. Yeah, exactly. Okay, what was I doing? Sorry, guys. I got sidetracked. Okay. Medical. Oh my gosh, Kyle, that is wild. Hey, Lou. Good morning, dude. Hey, you weren't at the gym yesterday. Expert home buyer, you weren't there, and that was the day that I went, that I finally made it. It's been like 2 weeks since I haven't been able to go to the gym, and I finally go, and he wasn't there. At the time he always goes, of course. I'm from this area, it's like Sacramento area. I originally grew up in the Bay Area, but now I'm out in outskirts city of Sacramento. You've used a stock database to check stats like short float. Can you remind me of the link? Yeah. First time chatter there, QU, Quitza, Coat. You can check a FinViz. FinViz works pretty good for that, as one of the things that I've used. You went at 5 p.m.? Ah, that's okay, I get it. All right, we're gonna pull up some of these names now. Expert home buyer, he's a YouTuber. He may or may not be related to me and look just like me. Hooked it up with my house. Got me a 6% rate when it was like 7.5. All right, so we're still floating kind of under this liquidity here. Market kind of got rejected there as we're outside of that weekly expected move. This is to be expected, right? We shot straight up today. Now, are we going to consolidate a little bit before potentially making another run? It's a possibility. We still do have a nice bullish market net flow here. This was kind of the concern here is from a 0-date level. They did start reaching out to 50.75, but the main area is that 50.40 to 50.45. So, I mean, is a pullback into this level like possible? I think it is possible. Will I short into it? No, because of market net flow, but we are in negative gamma. So if we start selling off, it could be rapid into this area, but bullish market net flow, right? Bullish price action for the day. I'm not trying to catch every move. The main move here that I executed into was the prior day, looking for a bounce up, right? You know, some relief, getting back above the 5-day moving average. That's positive as it's neutralizing itself out. That's, you know, bullish, but it's with caution until we start to turn up. And then we're in negative gamma territory. So we can still see negative gamma territory up here at 51.20 is the flip line. A lot of like shakiness, a lot of fake breakouts and so forth. So this is where people are going to get very excited. And unfortunately, when you get very excited and you kind of this is where people can really mess up. When they're averaging down and then all of a sudden it bounces and they're like, yes, 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 yes. And then they hold on to these things when trends change. Okay. Is that going to be the case here? It's too hard to tell. And we don't know. No one ever knows. But what you can do is you control those emotions and understand that, hey, if you got some of it back, understand there are people willing to just try to sell into these rallies. That is a possibility. Okay. Now, we don't want that. We want a rocket ship. We want a rocket ship. We want to eat this liquidity up and see if there's anything back overhead. It's kind of flattening out. 2 delta move, 2 standard deviation move on the S&P 500. So it'd be the upper side would be 506.50 and the lower would be 492. So 506.50 would be the 2 standard deviation move to the upside today. Okay, let's take a look here at Tesla. We're going to get into Tesla. You know, in order to look at Tesla properly, we do need to be in our Cybertruck. Good evening, and ladies and gentlemen. We came in. We've got, dude, Tesla's just been getting hammered, man. No love. Filling this gap right here, but it's leaving someone's overhead too. We're kind of just there's like no volume traded here, and we just cut through it like butter. Okay, so and then we have earnings right after the bell. I don't know. Part of me thinks that this is going to just gap up. Like, how much more pain can this thing take? Now, the trend would suggest that it's going to follow through more to the downside, and I'm not willing to put money on the line for Tesla, given the context of how this looks. But if we go into the trade tab and we take a look here at the earnings expected move, we're roughly at about 1461. So 1461 from where we currently stand. I mean, it's not even that. Like, I'm gonna remove these. I'm just gonna go ahead and use this line here like that. These will be our expected moves now. So this looks like the earnings expected range for Tesla. Is anybody trading this, like activating a new position, like some sort of like options idea? So this would be just a 1 standard deviation move, right? 1 standard deviation move. If it comes back up here, it's really just retesting that 160 where we broke down and saw that flush. If it gaps down, it would just be continuing that trend, obviously. So when I look at this, yeah, is it oversold? Probably. But, I mean, from a fundamental perspective, I don't know. I mean, it is a car company that's been absolutely crazy in the midst of lower interest rates. And then the moment we start raising rates, we start introducing all types of volatility into this market. And now you look back to the left of the screen and it's very clear that it's just been going sideways to down. And even on a strong bounce up, even if we came back up to 200, you would still be putting in lower highs. So if I'm looking at this, I'm just like, okay, what's about this little, what was this? Was that the pandemic right here? Gosh, it looks like nothing. Was this a pandemic? March 2020. Jeez. Yeah, so if I connect from the pandemic low to here, oh, that's kind of cool. Look at that. So the pandemic low to this crazy low in 2022, look where price is coming to. It's actually tagging right there right now. That's random. What an interesting time. Okay, and it's coming into earnings. So if this has this break, I mean, if it breaks, I mean, you can always see a retest of the trend line. That actually kind of reminds me of Tesla, or of Nike. And then we have this above us. So maybe, perhaps, like, hey, okay, so you're thinking that we might bounce. Okay, if we bounce, even if it comes all the way back up here, like I said, to 200, it'd still be a lower high into this trend line. Those are possible. That's a possibility there. That reminded me of literally of Tesla, of Nike. Let's look at that really quick. Take a look at Nike. So Nike from the pandemic low to this 2020 swing low here, and then that was the 2023. Then it cracked, and then we said, okay, if it cracks, it's likely to go back test. And look at it, it's came back and it's back tested. Still in a downtrend, but you can see once things sell off a little bit, they do bounce. So interesting little price action there. Okay, let's take a look at some of these intermarket assets, and then we'll get into your guys' various trades there. Okay. 10-year yield is really just going sideways here, consolidating sideways. Hasn't really pulled off yet. So this is almost still a concern, right? We're a day or two separated from that high. The dollar's coming off today. This is going to this right here definitely helps out with today's move. You can see here we actually tightened up the small little tiny bodies and we followed through to the downside pretty aggressively. But it's coming into this lower trend line here. So is this still flagging out? Maybe. You know, draw it like that or whatever. But it would have to recover if that's the case. So this could be a consolidation. It could be a breaking down. We'll take a look to see if it retests maybe these levels. If that's the case, S&P 500 can have some more upside potential, perhaps. But we're 1 day separated from those swing highs, and these type of assets, intermarket assets, do put weight on other, obviously, assets, including the S&P 500 and various other ones. It's very important to watch the dollar's correlation from multiple time frames on multiple assets. The assets that I like to watch, it would be like, you know, oil, the S&P 500, gold, right? Those are some of the ones that I would watch the dollar's correlation from a 15-day, 30-day, 90-day, 120, 180, etc. Because then you could see longer term correlations. Okay, it's typically a negative. It's typically this. It's typically that. And then the shorter time, the shorter time is starting to change here a little bit, which could mean something, right? It's data that it could feed into your approach to these markets. Okay. Tech leading the way today. KRE, even regional banks have been seeing a little bit of a comeback here, but really not going anywhere. So we saw this flush and we're seeing, 3 days to the upside. IWM's also recovering here a little bit. I'll be honest, if you look at Ready, man, this was clear as day it was going to happen. Look at Ready. Look at Ready's candle right here. This big old lower tail right here, bottoming tail, and we followed through to the upside to a bounce. Now, here's the thing. We went pretty much straight down. Now we're going straight up. What you need to see is a higher low, right? Or a higher high. So it comes up, like, watch for the pullback. Like, it's going to happen, like, at some point. And then you need to see strength from that. And then you need to see it overtake this prior high to change the shorter term trend. If it just goes like this, it's just literally expansionary move to the downside, expansionary move to the upside. It leaves people wondering, okay, like, what is going to happen here? What is going to happen next? It's always easier when things start to tighten up because it gives you a better risk to reward. All right, yeah, we'll pull up some of those names here in a moment, okay? Yeah, and then Q's had it the worst, right? Tech sector got hit pretty hard. Big down days, and we're seeing a reflexive bounce. Like, this was the outside trading candle right here. Traded up. Close at the lows. What did we do? We never negated it. We chopped around for 1, 2, 3, 4, 5, 6 trading days before breaking the low and then getting a flush to the downside. Okay, this is what I meant. I'm pretty sure we talked about it on this specific day here. When you see moves like this, it's typical to see inside trading days and consolidations. People get excited, like, oh, it's over, and then all of a sudden the move comes. That's contraction leading to expansion. And now, we're seeing a reflexive bounce. The same thing really happened with NVIDIA. All right, NVIDIA, we saw this outside trading candle here on big volume, and we said, okay, this is probably where we start to consolidate. It could be a while. And that's exactly what we're doing. We're going sideways. We're getting we got a pretty big distribution break the prior trading day, but overall, I mean, it's not like crazy, crazy right now to the downside. It's
JP Morgan CEO Jamie Dimon presenting at the economic.
A couple of good days, it can bring us right back up here, and everyone forgot about this. A very weird market. Very, very, very strange market. Now, from a seasonality standpoint, this is where typically the markets flatten out for like a couple of months. And into the end of June is where we start to see, strength come back in. Market net flow waning a little bit here, but still very bullish divergence. Not once again, even though that we're up at the weekly expected move, you might think, okay, well, should I fade this back in? Not with the dollar, like the dollar coming off, positive market net flow. This is stuff that I wouldn't fade because it can keep going. Right? We could keep going. I wouldn't touch it. And a lot of the times, right, when we get to these weekly expected moves, the market just kind of does its thing. Might come off a little bit, might go back, might go up a little bit, might come back. Very common to see that type of stuff. Going into tomorrow, we have durable goods. The following day, we have GDP growth. Got some initial jobless claims. And then Friday, April 26th, we have our core PCE, personal income, personal spending, consumer sentiment. So we got all kinds of stuff happening this week, including earnings. All right. All right, now it's time to go into some of these names that everyone's mentioning, okay? Okay. I'm gonna look here. I'm gonna write down some of the names. IMPP. I've never heard of this. Is this like some biotech name that's seen some crazy action or something? I'll pull it up. All right, Hood. I did see some decent price action in Hood. Baba. Dust. Dust sounds like a leveraged gold something. TSN weekly. Put them in the chat if you guys want me to put them on the list. I'm going back through the thing right now. UNH. God, this auto
report on our call
man.
saying the company continues to need to do more to improve efficiency and productivity.
We'll go through the Mag 7 names.
Have first cathode production this October.
Enphase, yeah, Enphase is reporting, right?
Charlie X-ray.
Okay. Here's some of the names, and we'll go through them, and then we'll go through some others as well. Okay. Oh, whew. Sip of water. Pfizer. IMPP, Imperial Petroleum, so not a biotech. These names are a little bit hard for me to deal with, to be honest. They move, like these little penny stocks move so quickly, and you get all kinds of crazy volatility. Like this little down, like from the peak to trough, right? We're talking like 13%. It's pretty crazy. So if I'm just looking at this in terms of just technical analysis, yeah, we saw some big volatility to the downside, and now we're getting tighter right here. Right, so where would a stop be? It'd probably be under this. It's this little coiling thing. I'm not going to spend too much time on this one. I don't know its market cap, but you can see that you see this kind of cupping sort of pattern. It tried to make a breakout, but it got stuck up, and now it's kind of just getting pretty tight here. So a break here, could lead to a little bit more of a pop, but I would respect it if it breaks down. Okay, so it is coiling up here, and it's in somewhat bullish context, right? You have an inclining 20-day, even though price is below it. Inclining 50-day, it's currently holding, so that's where you'd want to hold as far as the risk goes. But this is a wild name. This is choppy, and I don't know the liquidity in a name like this either. So if I look at the 1 minute chart, do you see this? You see how it's like it just pops and pops everywhere? Like, I like more fluid names, higher liquidity, especially if we're talking like $3 here. You know, like some minutes it has only 13,000 shares trading. So these ones, like, I'm not a big fan of. I prefer to see much more volume, a lot smoother price action. At least the bid ask is pretty tight right now, at least 330 to 331. So overall, yeah, I mean, it looks like it's, you know, finding some strength here. And, you know, you could consider this like a wedge pattern, like I said, coiling up. Just respect it if it breaks down. That's pretty much there for IMPP. Yep. I don't know the news story behind it, if there's like some sort of you know, something going on with it or not. That made it, that drove price up from where it was, or if it has to just kind of fall in the category of like, hey, a lot of oil names have been seeing big bids. So if that is the case, then be careful, because these names, the smaller names that got big bids because of oil was moving up, if oil comes off, or if there's, you know, something to do with like, you know, energy names and they come off, these names could get affected a lot harder, a lot quicker, a lot faster, typically. But once again, I haven't looked into the market caps of this or anything. I'm just looking at the volume and so forth. Like the volume, you know, volume. I mean, yeah, even on the the lower volume days, we're talking a couple 100,000 shares traded, but it's like a $3 share. You know what I'm saying? Even on the high volume day right over here, it was 3 million shares, which is pretty low volume for like the highest volume all year for a single day on a $3 stock. So I never really had great luck with that. But then again, these low float names, I've known people that have made a crud ton of money on these low float names when they start going in your favor. So it comes down to preference. It comes down to preference. Just, you got to manage risk there. Okay, so here's Hood. Hood did see a nice big run here, and now it's been consolidating a little bit longer. And take a look at volume. Volume's kind of drying up here, and we're pulling into that inclining 50-day. So this to me still looks like it could be a potential bullish consolidation. We have earnings not too far around the corner here. One thing to pay attention to is obviously, you know, crypto, right? Bitcoin stuff. Sometimes these are kind of like move hand in hand for the most part. Not perfect correlations, but sometimes these names do correlate pretty well. Give me a second here. So overall, yeah, this one looks pretty positive as we're still inclining. Where can we potentially get hung up at? This 20 days starting to curl around, so the shorter term trend is starting to turn. Where would you get in? Where would you get out? So we're basically breaking out today of this little tiny tight pattern here. Okay, but we're still in a larger structure. So you'd say you'd want to hold your stop probably under this swing low, right? If you think that price is going to continue up, you'd be playing this breakout or playing up into here, and you'd want it to hold this swing low. Because if it breaks that swing low, we don't know if it's going to undercut, how low of an undercut, or if it's going to just tag it perfectly, and then eventually turn back up. And just be mindful of that. You have earnings also around the corner. So if it starts pulling down and then you run into earnings at around the same time, right, or it's just sideways into earnings, or even up into earnings, you have to consider going into the trade tab or the options chain and looking at what the expected moves are going to be, and looking up close to around $3, which is, it can bring us up to this swing high. It can bring us back down here. But overall, nice little structure there that's taking place. Baba's been a widowmaker here too. So a lot of Chinese names, right? So this one saw some sell-off. Now we're seeing a little bit of a comeback. Look to the left of the screen. What are we doing? We're literally just going sideways. Range trading, right? There'll come a time where this comes back into play, but as it stands right now, man, this is just all over the place. All over the place. Now, the 200-day, it's still declining, and we're well below that. So the longer-term trend is still bearish. Go out into the weekly time frame. You can see it a little bit more clear here. We're looking at the 40, 30, and then the 10-week. And you can see we're trying to get back kind of above that right now. And this could be a period of accumulation. If you look back to the left of the screen, we haven't gone anywhere for years, right? But what would be nicer to see is if this comes back up, and the 40-week, the 30-week, they start turning back up like this,
the Brazilian steel maker,
and so forth. And then it might be moving into a more positive trend.
Prices due to cost pressures. Simonas.
K-Web, an ETF, is doing pretty much the same exact thing here. If I go into the daily time frame, I saw this little pattern. I played it up, and then we broke through it, and then we're kind of coming back where we're recouping some of these levels right now. I'm going to remove all this stuff. And where are we? We're back at the 200-day, and you can see the more we trade around it, it's going to flatten out more. So you'd want to hold, and this can start flattening out. The 50-day or the 10-week can start pulling up. The 20-day here too as well. So I mean, it's a positive sign. It's a positive sign, especially that we're holding these lows down here. But we're just not getting that follow through yet. So your money can be chopped up for a little bit. It might have to be, you know, a longer term hold if you believe it.
Just sell 75 billion in 8-week bills, 70 billion in 4-week bills.
Dust is leveraged, I believe.
As expected.
Yeah. What is this one? Daily bearish miners. Okay, so this would be if you believe that miners are going to come off. So instead of looking at Dust, I'm going to look at GDX. It gives me a little bit better insight. So when I'm looking at this, right, some might look at this and be like, oh, dude, it's actually potentially wedging right here on an upside pullback. So, and we're seeing some upside today. Now, this candle right here could be it could indicate to us a reversal or a longer period of consolidation, right? Why? Because we gapped way up, we closed near the lows, and we saw a lot of volume come in. So this could be that, just like we pointed out in video, when this happens, you can see consolidations or sideways price action, which could chop both bears and bulls. So if you believe that price action is going to come down lower, then yeah, obviously that makes sense, right? Then Dust could be a potential play because you'd be inverse the miners, or even that GXJ, the junior miners, right? Whichever one that one's tracking. But as it stands right now, you break out of these levels. We broke out. It's a huge run, and now we're really kind of just digesting. They have a very strong correlation to silver, and this is why I would be like hesitant to short, is because silver saw, like a 4 or 5% down day, had some follow through today, and now we see a bottoming tail. So if silver wants to recover a little bit and bounce up, I mean, that's probably going to be good for the miners. Has anybody seen that correlation chart before? I can show them again if you haven't seen it. Between gold miners and silver. It's pretty wild. Take a look. So here is a chart of silver. The silver is the green and red candlesticks, and then the black is the GDX. And I'm just showing you, I'm overlaying candlesticks just so you can see. I mean, look at them move hand in hand together. Each candlestick represents a daily chart, right? Silver is not updated for the day-to-day, but it's kind of like bouncing from the low. Okay, so the reason why I'm saying this is because if you're bullish silver, chances are you're going to be bullish miners. If you want more leverage than silver, you can look into miners. So if you hold the belief that silver is going to come off hard and fast, but remember, if I pull up silver on a weekly time frame now, take a look. Take a look. We talked about this. We said, okay, would you chase up into here? And the answer was no, you'd wait for it to consolidate. And if you look at the bigger structure here on the weekly time frame, we saw a massive breakout, and now what? We're just pulling back in. We're pulling back in. So can it pull back in more? Absolutely. We've seen it before. But if silver is going to hold this breakout and it turns back up, that can destroy bearish miner positions. Now, on the flip side of all of this, let's look actually at the BP GDM. The BP GDM is the bullish percent miners index. Bullish percent index for miners. Give me a second here. So this is BP GDM. This is the bullish percent, gold miners bullish percent index. And we've talked about this when it was down here, saying that it could be an opportunity for buying. We talked about the bullish divergence, and these led to rallies, right? And then you look at the RSI. It's on the weekly time frame. It's telling us right here, this chart is telling us the percent of stocks on buy signals based off of the point and figure charts, the ones that look like tic-tac-toe, okay? And when we get overextended, right, when we come up into these high readings, so we're here right around 80 on the weekly time frame, right here, right here, right here. What was the RSI doing? The RSI was overbought. The RSI was overbought. This one actually had a negative divergence. It was overbought. And then what did they do? It marked turning points, actually, in the miners. So is it going to be a similar outcome here? And that's a possibility. So there's bearish aspects to what we're seeing, or potential bearish aspects. Looking back through history, it doesn't always have to have the same outcome. Even here, like this is in 2020 during the pandemic. I hit miners pretty hard here. I hit gold and silver hard here when we came way overextended down into like the 10% reading. All right, and the RSI was getting burnt to a crisp, and these things ripped 300, 400, 500%. The miners in 2020, sorry, coming out of the pandemic. Okay, and now what? We're back up to these levels that we've seen some sideways, pullbacks. Okay. And overbought can stay overbought for a while. Be mindful of that, because we came actually overbought here, before April, and then it was after April, so multiple weeks of actually still kind of going to the upside here that created this divergence. And then we had the negative, the positive divergence here, opening the door for another nice run in the miners. So hopefully that gives some insight there. The markets are coming in here a little bit. Don't be shocked. Don't be surprised. This makes complete sense. We got outside of the weekly expected move, and we're coming back in. We're outside of the daily expected move. Yesterday, this same thing happened. We got outside of the daily expected move, and we came back and we closed right on it. The daily expected move yesterday was 499.68. 499.68 is literally right here. Got out. So basically, right? What was Monday? We came outside of it and we came right back into it. Those are typically the higher probabilities. Okay. Doesn't mean that we have to come down here. Look at market net flow. Market net flow is still bullish convergence, bullish divergence. See if anybody is still reaching out here in gamma land, 0-date levels. 50.45, 50.40 are still the big ones. They started to reach out here a little bit to 50.75. So I mean, that tells me like, hey, just be aware, like they can come right back in, but it's good that it's holding that level at least. So we see a little bit of a volatility there in NQ land.
The DAX is up about 1.5%, along with the Spanish IBEX and the FTSE.
That's the update here on the current markets. I'll take a look at my portfolio. I took out some. I took some off, as I already previously stated, into just above the weekly expected move, or right at it. I think we're just kind of above it. But that was for a shorter term trade. It was a leverage trade. Well, okay, it was a leveraged. It was one of the funds that use leverage for the S&P 500. But it's this is like a cash account right now that I'm trading, not swing trading. Gosh, I'm all over the place today. 85, 23, 85, 23. Let me see here. I'm trying to see. Yeah, as far as like my portfolio goes, this down move in the market, it affected it a little bit. So I had like a few portfolios, but it's all kind of within one account. And then I have another on a different brokerage. My interactive brokers is completely separate. But when I'm looking at this, like, so one account is literally just making new highs. It looks great. And the other one got affected on the down pull because I have more exposure to like, S&P 500 and so forth. So it was affected on this down move. And then when I added in on the deep decline, it since recovered. So I'll give my update on the P&L there, but I feel like I held up pretty well. I'm looking at just total, and I'm down slightly off the all-time highs. So of my portfolio. Oh no, I'm not. No, after today, if all holds together today, I'm actually at new highs for my portfolio. My IRA is the one that got hit with the down move, but it managed it decently. I'll show the P&L when it updates fully. Let me see here. But as far as positions go, I lightened up a lot on the positions. What one of my accounts doesn't have anything on right now at the moment. It's just sitting in cash because I took a Lulu trade in it. I took some S&P 500 trade into it. I'm out. That's at highs. The equity curve in this thing has been crazy. Look at this thing. I'll just show you. Look at this thing. This is crazy. Oops, nope, can't show that. Hey, let me show you everything. This is crazy. This is just one of them. This is just a part. So I have like I said, multiple accounts in here. This is just one of them. That one's just been bonkers. Very, very, very just tactical in and out type of trades. The whole main account, it's like barely, once it updates today, it'll be at new highs. And I'm not showing this to brag. This is just managing risk, people. This is what managing risk looks like. This is the main port. This is everything. So it came off, like, so you see that it came off a little bit. Today, it's right back up here. Maybe a little bit higher if everything holds together. So during, the reason why I'm showing this is because it's important to know this stuff, because in the midst of volatility, right? Let me pull up the S&P 500. In the midst of volatility, and you know, if you've been watching this, you already know, but now you get to see it in action. So this was, you know, 5% down move, right? So what I'm showing you here, that's almost a 6% down move, is my portfolio went down a little bit, right? But understanding that when volatility things started changing over here, significantly changing right around this area where we kind of issued that big warning, how things could get more difficult. And we were talking about how things could change from a price action perspective because we were kind of floating around that gamma flip line, and we're still under it. So we're under the gamma line, which means that we can still see buying into buying, selling into selling. So you see moves to the downside, moves to the upside, and so forth. And we were underneath the 5-day moving average, right? The 5-day moving average started neutralizing itself back over here into April. Okay, it started flattening out. And then we started getting above a declining one, which is bullish, but with caution, given the context of the change. And now we're kind of getting some strength back above it. But notice how it's still early. Like we're seeing a strong move. Like where did price come from? The price just made a huge advance in negative gamma land. So, and it's still technically, it's flattening out, but it's still technically, okay, bullish, but with caution. So what you want to see here would be nice is if this actually just trades around the weekly expected move for the remainder of the week, this starts to flatten out and come up, or even this takes a bigger hit and flags out like that would be better. And this goes sideways and then starts turning back up again, but at a nice incline, right? And then we would start targeting, obviously, the month-to-date lower EM for this month, right? And then also the April anchored VWAP. So if you are bullish right here, okay, where would your stop be? Okay, so if I can do this, now we have all kinds of earnings, so we don't know what's exactly going to happen here, but you can anchor into the swing low of April. Okay, so here's the swing low. Let's go properties. We'll change this up. We'll make it all cool and thick looking. Okay, right there. We'll make it white or gray. Okay, there you go. So here, this is the swing low for the month of April. So now prices came up. We bounced from it. We came back down. We came right here into and around the swing low, but it was also the week to date anchored VWAP. Now we're seeing a move here. So you'd want to hold, right? I wouldn't chase up into this weekly, but if we can hold the 5-day and the weekly, I mean, this is at least the early signs that we can see something sustainable happen.
The conference call is ongoing, saying that they're responding to subpoenas received by the DOJ in late 2023 in Gulf Lima.
Okay, we'll pull up some more of these names here. I'm going to check into the chat, see if everything's all good here. Do professionals even use TA? Yeah, all the time. Professionals definitely use technical analysis. Technical analysis, I mean, they might call it quantitative analysis, right? But it's in theory, I can call what I do quantitative analysis. I mean, really just look up the definitions, because you're looking at volatility, you're looking at price, you're looking at volume. All professionals, they look at volume, they look at volatility, they look at price, right? So yes. And if you're not, what are they doing? What do professional money managers do? Are they designing an algorithm? Okay, what's their algorithm based off of? Does it have anything to do with price, volume, or volatility? Chances are yes. Okay, what about macro drops? Is it words or is it response like CTAs? They're momentum traders. CTAs are momentum traders or algorithms. They have no feeling. So when price goes down, you hit certain levels, they sell into selling. When price goes down at a certain rate or certain level, they sell into it. Price, volume, volatility. technical analysis, quantitative analysis, call it whatever you want. It's the same. It's not the same thing, but it is, in theory. You can literally have the argument that you're using the same tools. So technical analysis is not a way to predict markets. It's a way to forecast trends. That was how John Murphy defined it in his book. That's the one that I go off of. You can go back further, right? These are Japanese candlesticks. You can go back to the early days of the Japanese candlestick Bible and start reading into that too. And then there's all kinds of other things like you can use as it's a way to view markets. But yeah, professionals use it. Right? I mean, even hedge funds, they might, like I said. So like for example, like because a lot of people were like, oh, the moving averages are pointless. Yeah, maybe, especially like, you know, I would kind of agree to an extent, because if it was that easy, but that's just to see trend. The moving average, when people say an indicator doesn't work, I always laugh. All right, so hear this out. Hear me out. I get this a lot. Oh, your daily expected moves, they don't work. Weekly expected moves, they don't work. Moving averages, they don't work. And my response is always the same. They work 100% of the time, right? RSI, it works all the time. All the time, the RSI always works. What doesn't work is your strategy and your approach in that given market condition. But any indicator, any technical indicator, any quantitative indicator, it's taking price action, volatility, volume, and putting an output out, and it's mathematical and it's 100% accurate. It's just the strategy differs in various market conditions. So my point is, people try to look for the next indicator, but they're not understanding that new market conditions happen all the time. So when your strategy stops working, instead of understanding, instead of looking for another, strategy to work in that indicator or whatever, you just need to be patient in these times. Hope that helps. Give some insight there. Professor Mike. Hey, good morning, CBX. Real question is, do they long on moving average crossovers? I'm sure that there are some algorithms out there, but dude, if it was that easy, everyone would and if it worked that well, I think everyone would be doing it. I think that's an early indication that the trend could be actually changing. So then they'll look for maybe pullbacks and they'll look for consolidations and go from that point. I'll give you an idea. I'll give you I can't think of one right now. I mean, I know that I can if I can really think about it, but yeah, like it could be an early indication of a trend change, but it doesn't mean enter right away, because, okay. Here's your crossover, right? So here is the 200. Here is your 200 day. Okay. And then here is your 50 day. Let me think here. Okay, we'll say this is the crossover right here. Okay, and then this will be, we'll call this price. Okay, so this huge move right here just jacked the 50 day up above the 200 day. Does this mean you're gonna long on this crossover right here? Absolutely not. But this, with this volume, like lined up with the volume right here, could indicate that now it could be the times are changing. So would you enter here? No, but what if it goes like this? And then the blue line is now here.
Each individual agent to identify
the red line is up there, and then it consolidates like this or whatever. And now you're like, oh, now this big move of a potential change in trend is changing, and now it's giving me a better risk to reward to potentially play into it. Cool. All right. Market's holding up fine right here. We're just trading in and around the weekly expected move. Once again, this is not something that I would short into, given the context of market net flow. Right, we're seeing some volatility. We're still under the gamma flip line. Are traders reaching out any further here today? Back to 50.75. They're starting to reach there a little bit. So 50.75. We actually came into 50.75 already.
Get Martin LMT on their conference call saying that
traded forever. What YouTube layout? Did YouTube change a layout or something?
Of an improving supply chain, Lima Michael Tango.
I just press my button until I make money. Hey, what's up, Moonraker? Hershey, yeah, we'll pull up Hershey for you, buddy. Hershey is earnings around the corner. This thing has been just a dog, man, just going sideways. I'm literally wondering, like, how much more heat can this thing take, falling from grace from 276. It was basically a straight shot down. I was watching this for a while. Just nothing came from it, so I gave up on it. And then we see some follow through to the downside. You know what's funny, though? What's interesting to me is I want to show you all the chart about consumer staples, one that I showed a minute ago, and I haven't updated yet, but now I'll update you on it. Let me see here if I can find it. Yeah, I can find it. So this is the relative strength line, consumer staples versus
upcoming ANF, S&P upgrading their rating to
consumer staples versus S&P 500. And what I'm pointing out here is, when this line goes down, right? When this line right here goes down, it's telling us that the S&P 500 is outperforming consumer staples. This happens all the time. Okay, it happens all the time, especially in bull markets, obviously. Consumer staples, if you look at like something like XLP to XLY, right? This is basically showing us the ratio line between needs versus wants, right? Meaning consumer, what did I say? Discretionary, consumer discretionary ETF, you know, is like discretionary stuff. People, they don't need it, they want it, right? Consumer staples are the things that like people need, like food, grocery, whatever the case is, all right? Need versus wants. And then that also, like if the line goes up there, right, it tells us that people are going for what they need versus more what they want. But if it goes down, it's the same thing. So I'm just using XL SPY. Now, there has been kind of interesting stuff between divergences in the RSI of this ratio line and also the rate of change. And I've noticed here, even going into 2022 is when I mainly called it out. And even 2023, it was another one. But you saw this positive rate of change divergence, positive RSI divergence going into 2022 as this line was really sinking off here. And this gave us indication that, hey, there could be internal strengthening between the difference between consumer staples and SPY. And this doesn't mean that consumer staples are positive. It just means that they're going down less than the S&P 500 as well. Like, you know, both ways. It's a relative strength line. And you can see we saw the pop up. This means consumer staples, people started focusing more on needs than wants in the 2022 bear market. Things started changing going into 2023, how we saw a negative divergence between the rate of change and the RSI, and then it started falling off. And the reason why I'm pulling it now is because we saw a positive divergence here, a positive divergence here as well. And we're starting to see that little bit of an uptick, which means consumer staples, if this line starts picking up, it could very well mean that consumer staples are going to outperform SPY, which is not always the great conditions for the market. Another one you could look at is like the energy related to the S&P 500. And that's also been very helpful too, which we've called out. Let's take a look at NQ is at new highs of the trading session. Once again, do you understand now why I would not short into this given the context of this right here? Hope that makes more sense there. So tech is leading the way here. S&P 500 did not make a new high. NQ did. Up a 1.07%. Excuse me. In the S&P 500 trading outside of the weekly expected move, trading underneath the month-to-date lower expected move. Still a potential target area there. Coming back inside would be that higher probability. We still got a lot of time left in this month, I guess. Hey, buddy, ES weekly expected move at 51.05. Looks like we just hit that level. Thanks, Will. Let's pull that up, shall we? So weekly expected move. I'm going to pull up my weekly. See if it lines up and make sure that we're good. 50, what did you say, 5,100? Yes, you did. Right? Where are you? Will, yeah, 5,100. Yep. 5105. I'm basically right there. I got 5100 on mine, so 5105 it's the same thing. We'll call it the same thing. ES coming here, 5105, 5100. So yeah, we are at the weekly expected move there also for the ES as well. The big product to watch is the SPX, right? SPX is the larger product of all, where a lot of hedging activity takes place. The upper one would be 5063. So if I go out here and I look at the CBOE SPX, we're at 5066, so we're outside of the weekly expected move there too as well, just by a little bit on this bounce.
This year to 523 million tons. These Russian crude exports nearly flat at 240
million
tons this year.
Not too shabby at all.
Rising gradually to 270 million tons in 2027 for Russia.
I would like this account to go back to my highs. I'm not far off. Off like a little bit, a few percentage points. Okay. Yes, is this by near the weekly expected move? Yes, it is. It's right there. It's right at the weekly expected move. So it was already a big expected move, and in 2 days we've hit it. Right, and this is right here. This is negative gamma territory for you. You get strong sell-offs and you get strong rips right back up. Okay, that is just how this market works in these environments. You want to see Riot? We'll pull up Riot. Is Cocoa Futures? They back up? All right, let's pull up Riot here. Yeah, look at Riot. So too bad this didn't play out a little bit more cleaner. Same with Mara, same thing. Very, very tight price action. It didn't break to the upside, it broke to the downside. But look at this. This is stuff that happens all the time. You get expansionary moves, but it's like this fake out move. So you get this U-turn type trade, and then it explodes back up. I wouldn't have taken this U-turn because it's just not the greatest context. So yeah, would I chase into that? Nah, I wouldn't chase into this.
European earnings.
This type of stuff happens all the time. I'd wait once again for price to tighten up, and I would look for a clean entry. But yeah, nice big recovery there. So Bitcoin, right? Bitcoin's recovering a little bit here. We'll pull up the updated rate. What is it called? The Sailor to Shift tool. Let's pull that up and show you kind of what that might look like. Here's the Sailor to Shift tool. For those that don't know, this is measuring and mapping the rate of change between Bitcoin and gold, 4-week rate of change, and it identifies signals, buying and selling signals, and then we look for the triggers. If you don't know what those are, I'm not going to explain them right now, but you can watch the video that I made on this so you can have the same indicator. And our last signal was actually right here, and trigger. The trigger was right here. The signal was a week prior, but the trigger was right here. Boom. So this basically the candle crossed beneath the prior week, and it flushed down to around 60,000. So about $6,000, actually, yeah, about $4,000 or $5,000 drop. Okay, protected kind of that right there based off that trigger. And now we're seeing a long bottoming tail, and we're seeing follow through back up. Now the rate of change between Bitcoin and gold has not went positive. So right now it's still just on the sell trigger, meaning that I wait for this to turn positive, and I wait for the next week to go above the prior week's high. When that happens, I'll talk about it, but still it's on an active sell signal, sell trigger. But it's starting to turn up here again. So maybe this was a quick little whipsaw like it was over here. This whipsaw down here, it flushed from like 40 something down to like 32, 35,000 or something like that. A quick flush, and then it whipsawed us right back into a buy signal, buy trigger. Basically from here, boom, paused us for a second, and then boom, caught this move right there. And now it's paused up again right here through this volatility. That's the update on that. Sailor to ship. Yeah, I know that. Ooh. Miyasi-ho. Yeah, so as it stands right now, still 0 date is kind of this 50.75, and then we have 50.45 beneath us. I think it's going to be hard to escape where we currently are, unless if traders really start reaching out. So what are we seeing here as we're coming into kind of lunch hour, right? A lot of chop, a lot of volatility sideways. kind of like broke this little trend here. I wouldn't read too much into that. All right, we'll pull up some additional names. Bounce from the 2020 EMA. Q's volume begins declining. Let's take a look. I'm not going to see the fully updated volume for today, obviously, but yeah, that makes sense. The volume is declining on the Q's, given the context of, from where it came from, big, huge volumes, a lot of distribution days. That was the other stuff we were talking about. Distribution days, not the aspects of the SPY, the Q's, right? A lot of those distribution days started piling up. These little white lines on my screen for the S&P 500 were marking these spikes in negative gamma. Remember the episode where I kind of talked about that, where we actually saw bounces to, in and around these areas. And right here was one of the big spikes, and then a little tiny bounce. But over here we saw a big spike, and it continued in negative gamma territory. But now we're getting that little bounce, not too far off.
2%.
It was kind of a cool way to look at it.
0.25%, and the CAC up about 0.9%.
What I'm referencing here is the time series of net gamma, right? So we started seeing these spikes. You can see spike, spike, spike. Those white lines are kind of marking out all those spikes on the screen. And we bounce from those areas. So now I want to point out. So do you see how we were kind of in negative gamma since really April, the month of April, right here? This is the zero line, right? The zero line's right here. Above it is positive gamma, below it's negative. If you look through history, like this entire run right here to here, yeah, we have tiny little pockets of being under the flip line, which we managed perfectly fine, but the strength was still there. Whether we be above a 5-day moving average or kind of right around it, it kept us in the trade from really just kind of late October to early November to April, okay? And then prior to this, you see this right here was a lot more negative gamma. And negative gamma, what does this mean to us? It means that selling but gets selling, buying but gets buying, and you get much more volatile price swings. Well, this right here was, in fact, this entire area. Right here. That was the 10% correction. Well, now we're over here, and we're getting, we got a 6% correction, so as it stands right now. Okay? And then remember, over here, what did we see? We saw violent sell-offs, and we saw rip-your-face rallies back up. Okay, but during those rip-your-face rallies, what happened? Well, we were actually still kind of in negative gamma territory. We got positive a little bit, but went right back to negative. Boom, right? The second dip over here, right? We got into positive gamma, or no, we didn't get into positive gamma territory. We saw a face rip in rallies and then followed back through to the downside. And it went in kind of a wave of 3, which is very typical actually in bear markets. You can see that too. But you get these like 3 waves. So right now you get a wave 1, get this hit to the downside. Now we're seeing a little bit of a reflexive bounce. Is this the time to be like, yeah, we're coming back to all-time highs? I mean, I would love that. I would love that because I basically trade from the long side. And when this happens, I get less trade ideas. I have to trade less typically, right? Because it's a time to protect capital versus anything. When you're in negative gamma or where you're below a declining 5-day moving average. So yeah, I mean, this is, when we're down in these areas, when we have this type of negative gamma, this is where liquidity dries up, which we've shown on the prior episode of actually a chart of the book from Goldman Sachs or Morgan Stanley or whoever posted it. Liquidity dries up. And then on top of that, volatility increases, right? Liquidity dries, volatility increases. Liquidity increases, volatility decreases. So you get, dealers in positive gamma territory, they buy the dip, sell the rip, buy the dip, sell the rip, and volatility subsides. I'm trying to think here. So do we have any good little setups taking place? The last couple of setups that I posted, let's follow up on those for anybody that's in the Discord. I think I just posted a couple trade ideas given the context of the market. There was a follow through on FDX and then also Brinks. So we'll take a look and see what's going on there. I couldn't take any of the positions. I just been out of it there. So FDX, I posted a while ago on FDX, and I still kept it up as an idea because because I did an early entry here, but it broke down, so I got out. It stayed within its structure, and then it broke out, and then that right there on a little bit higher volume looked like we can have some follow through. So this would be like stop here, and I wouldn't be entering right here, but like you can maybe watch to see if it pulls back and then tightens up to go again. I've seen that happen plenty of times. Like look at Dell. Like don't pay attention to exactly the move, but you see how he kind of wedged here, and we broke out and it pulled back a little bit and consolidated, and then went to the swing high. Now it's consolidating again here, flagging out. So this one also, I mean, this looks also decent, and earnings is a little bit of ways. It looks like it can come right, potentially break out and swing back up there. Just keep in context, we're in still negative gamma territory. And when we're in there, negative gamma territory, if the market stills off again, names like this, they can all be affected. Okay. So FDX was one of them. And then BCO is Brinks. BCO looked pretty nice. This, what does this fall under? Like business services or security, I guess. You have this kind of cupping pattern. We broke out of that swing high, and then we kind of just been handling like this. And then what I noticed here was on the down days, it was less volume. On the green days, it was more volume, and that was nice. And now we are coming into earnings, so be aware of that. But we broke out. We're getting some follow through today. Looks decent. So that, I mean, I'm like literally like a lot of my watch list got deteriorated on that big break of the markets. And now it's just a time to be patient, obviously. So there's a couple of them that we went through. Lululemon was one that prior to that we posted. I'm out of the position. As of yesterday, I'm out. I got right around here, right around the close. And we're getting some follow through today. The position was decent sized, and it was in a downtrend. So I played the break, updated my stops, took my profits for like about an 8% move or so. I think I actually got in this day, early entry. It was like a 5 or 6% move, somewhere around there. I thought it was like 8. I can't remember. How do I, so Systems Pro is asking me, how do I determine the daily expected move, weekly expected move, monthly expected move on daily basis? Can we use Thinkorswim options to figure this out? So on a daily basis, I use the expected moves. Oh, and by the way, people, did you all see IWM, the options chain in IWM?
NBA, Disney,
see what happened? Now, this was unreleased by the,
even though their exclusive period has concluded.
They'll probably release it today, but I saw this yesterday happen. I was like, wait a second, what's going on here? The self-regulatory, the Federal Register, like .gov or whatever, they had an early release of it. But now I think the main release is today. But IWM, look at the options chain. 1, 2, 3 daily expirations. So now we have Tuesday and Thursday expirations as it stands right now in IWM. So now if you're in the Discord, you're going to see IWM. It was only Monday, Wednesday, Friday, but now you'll see it Monday, Tuesday, Wednesday, Thursday, Friday, because we have now daily expirations in IWM as of yesterday. At least that's when I noticed it. And then I tried to look everywhere for it. I finally dug my way into this SEC document showing a release of, where was it? Volume 80, Federal Release, Securities Exchange and Commission, somewhere. It was like some weird document. I'm like, dude, is this real? What's going on here? And then sure enough, I found it, and it was technically unreleased, but it was like a pre-version, and it's supposed to be released today. So I don't know. We'll probably hear more about it. But yeah, daily expirations. Now, okay, so Mike, how do you determine the daily expected moves on a daily basis? So I don't determine it on a daily basis. So going into, for example, let's talk about the weekly expected move. I look at the weekly expected move.
Investment in R&D stands
look at SPX.
27.2 million for PHM in Spain.
The way that I'm going to do this is I go into the trade tab in Thinkorswim. You can use any platform, all right, and you can calculate it manually yourself if you'd like. But I would be looking at on Friday's close, a little bit after Friday's close, right, when markets have fully settled. I'll go in and I'll look for the next following week's expected move. So what is the following week expiration? I don't even know. Look at the SPY, maybe it'll tell me. Is it end of month? I don't know. Tuesday. What's next Friday's date? Anybody? It doesn't matter. We'll just call it whatever it is. Let's just say it's April 30th. I don't know. Just say it is. So say if Friday, so when Friday closes, I look out the following week and say if that's April 30th on Friday's next close, that would be my weekly expected move. I look to the left of the screen, I would see what the expected move is, and that gives me what it is. Now I don't update that daily, right? I look at what the market priced in going into the next week. So it's basically saying, hey, the market sees what data is going to be coming out. Okay, it's a discounting mechanism. It says there's these events, there's these earnings, there's all this information. This is what the market's pricing as far as volatility goes for all of next week. And sometimes the market's dead on, right? Especially in these very liquid products like the SPX. Okay, sometimes it's wrong, meaning that they price in risk incorrectly. So you can get outside of the moves, okay? You can get outside or whatever, and then they have to reprice, dynamic hedging kicks in, and crazy things can happen. But that's what I would do. And then the daily expected move, like for example, today we're looking at the 0 date right here. So when the day ends, I'm gonna look out one day and I'm gonna see what the expected move is for the following day. Once the market settles and it closes. So, 15, 30 minutes after the close, sometimes a little bit later. That's what I would do for the, equities. For futures, I typically wait until they open back up and then I clip it right there and then and there when they open back up to give me a more accurate reading. But that's how I would do that. And now if you don't have Thinkorswim, that's fine. You can go into whatever the at the money call and put is, right? At the money. And so for example, like we'll call like 240, 168. So add those two together and it probably equals right around 425, right? And that'll give you a rough estimate. So if you don't have Thinkorswim, and they use their own proprietary expected move and it works good. But I even think Tasty Trade has one. But any options chain, like you can manually do it. It'll give you a rough estimate of what the expected move is. You can do that going into earnings. So at the close of business for Tesla is going to be reporting. I'll go to the nearest term, right? And I'll look over here. It looks like 135% vol, 14.79 expected move. So when the market, comes more to close, you can go plus or minus $14. Let's go to SPY options, do straddle at the money. Yeah, there you go. Yeah, straddle at the money. They're Reggie. Sometimes people might not know, what that actually means, the straddle and stuff.
29.9 million. That was.
Or at the money. All these a lot of those the jargon within the options world. It is pretty confusing. Even me, sometimes I hear it, I'm like, what? What? But exactly that. Reggie knows. Said the correct way, Reggie. Me, the fifth grader way. Are you smarter than a fifth grader? No. No, I'm not going to turn off the stream, the noise, the background. That's actually this right here, which if you don't know what this is, Trade the News. This has actually protected us many different times when because you'll get news here before it actually hits the tape. So if something were to happen right now, we'll get notified before anybody else. And it's actually, it's protected us before and gave us insights too. Or it'll tell us when a report's going to come out. So it doesn't talk too often, but when it does, it could be a headline or very important news, and it moves, and it could very well move markets. Sometimes it's pointless stuff. Sometimes, like some of the random stock names, it's kind of pointless, and I get why we wouldn't really need that. And if it starts really talking, then yeah, I'd probably just mute it if I'm trying to talk about something else and it's just not important at that time. And I don't like right now, for example, would be a fine time to mute it. I don't see anything big coming up, but sometimes when this launches, I mean, it gets us in front of something before anybody else. The live news feed. And this is not cheap software. Not cheap at all. But it is annoying when they start talking sometimes, and if it's unrelevant, I feel ya. All right, so what are we doing? We're just trading in and around the weekly expected move. Market net flow, still bullish divergence, but take a look here. We started losing convergence, and now is the time where you can see the contra moves. And right now, what is the contra move taking place? Right now, it's really just sideways price action. So if we go into this negative convergence, meaning the S&P 500 is not moving with market net flow, you can, in theory, move back down. So if we start moving back down, just pay attention to the daily expected move, right? That would be the higher probability coming back in there. If you look at gamma, right, 0-day gamma, it's been 50-45 and 50-40 this entire time, right? So as traders try to reach out further and further, they did come up to 50-75, but still nobody's reaching out past that. So it feels like this is kind of where we're going to settle unless there's something happens, okay? And if they announce free burritos, man, we got to be ready for that. Give me a second here.
Are carrying KER in Paris, France, reporting Q1 revenue $4.5 billion in line with estimates.
Give me a second, people. Give me a second. I'm gonna put on Bookmap. I gotta go. I'm gonna go see what's going on with my kid right now. It's freaking out. Drop some tickers in the chat if you guys want us to pull up some more names. I have some ideas. I'm gonna go through some of the tight lists too. Yeah, we'll take a look at that. When is the 2-year auction? It's coming up, right? Or the 2-year note auction, yeah, 10 a.m. So we got about an hour. We'll pull that up a little bit closer here. I'm gonna take a quick, I gotta take a quick break. I gotta go check in on my child. Quick break. Drop the tickers in the chat if you guys want to pull up individual names. Cool, I'll be right back.
Italy going to be selling $3.5 billion 10-year, $3.5 billion in floating, and $3.25 billion 5-year bonds on April 29th. That's Italy.
Global FG on their conference call saying that they had a acquisition lined up recently but had to walk away because of where the stock price is in Gulf Lima. For TikTok and ByteDance saying that they have sent a TikTok light risk assessment report to the EU after the EU demanded it yesterday with a 24-hour clock.
Yo, I'm back. All right, let's do this. Okie dokie, artichokes. ES really should definitely hold this daily VWAP here. You really want it to hold up here. You do see some price action being stepped down a little bit here. And price action here stepping up, some bids stepping up into and around 50.90. If that gives way, we might see a little bit more of a flush to the downside. Unless if like things start opening up down here. But a little choppy price action over here. Okay. All right. So we got some names in the chat. We'll pull these up. IWM. Yeah, I mean, IWM looks, it's choppy. There's really no trend here. So it's taking a stab at the dark. Now, the trade, I think, kind of was here, looking at Ruddy. Russell 2000 futures, where we saw this big bottoming tail, and we saw some follow through, right? And now it's kind of a question of like, okay, so when's it going to consolidate and pull back? Because right now we're just seeing an explosive move to the downside. Now we're seeing an explosive move back up to the upside. You know, this is what happens in negative gamma. So I would like to see it consolidate or pull up and then consolidate. But right now it's a little bit, you know, you throw in some money, you know, here, and you're like, okay, do I put a stop down here? Because that's a big move to the downside. Look at IWM here on the daily. It's been going sideways. So you might look at this and say, okay, well, it could be just a range. You know, or I don't know, range, and just playing back into the middle of the range right around here. That's always a possibility. But I don't see a really great setup yet. You know, it'd be better if it did something like this and things started turning back up and then play a breakout. But it's a little bit too all over the place for IWM. I've traded in the chop here before, and then I took you know, even right here on this little breakout, I think, or maybe I missed that one. I can't remember, but. IWM is a little all over the place for me. Google is still very, very strong. Yeah, nothing going on here. Now, earnings is around the corner here, right? So 425, that's this week, right? So go to here, and we'll go to Gooby. Yeah, Alphabet right here after the close on Thursday. So would I be establishing a new position? Nah, I wouldn't be establishing a new position. I would be waiting. Now, if we get a good earnings and the market takes it like this and goes boom, I would then now wait for the consolidation, because typically when you get a positive earnings gap, you get follow through. And you know, if I buy here to play this, or I can, you know, if this happens, I can play a breakout here and potentially play it up even further, or whatever, you know, whatever the case is. So instead of playing this into a binary event, I can play this where I have more mitigated risk. That's, you know, that's how I would look at it. But yeah, we're a day separated from the all-time high, basically. You know, we're like literally a few bucks away from it, still trending higher. Google has been a top performer. I think Meta's been doing, fairly well too in these conditions. All right, and it pulled back obviously here, seeing some volatility, but we're not really we're not separated from the highs by much. Now, if we go into more market volatility, and there's earnings around the corner here, 424. So tomorrow, right, probably after the bell, Meta is going to report. And that's the thing. That's the unfortunate thing is you look out and you say, okay, well, we're looking at a $40 expected move. You're going to establish a new position knowing that we're going to be potentially
banks, large banks, including JP Morgan, Bank of America, and Citigroup, to see whether the banks were muzzling whistleblowers. And these large banks are facing this CFTC probe as part of NDAs in swaps and their clearing businesses.
Meta potentially being down $40 or up $40, right? Like it's kind of a toss. It's a coin toss. So I'd prefer to wait.
COV in Paris, France, first quarter revenue 154 million, in line with the year ago period.
A lot of these financials are catching bids to the upside. Just look at Goldman Sachs on the daily time frame. Nice breakout of this base over here. Came in with volatility, but then started upticking. Ten-year yield still floating around to the side. Financials have been just loving this. If I look at XLF on the daily time frame, this broke a pretty key trend here. Saw a big flush. But what are we seeing? We're just seeing a strong rebound from an exaggerated move to the downside. Very common that now, but it's like, where do we settle in at? Because now we have the low, and then we have this high up here or wherever it's going to stop. But like, are we going to actually see, a higher low form? Like you could maybe call this a higher low, to here or whatever to here, right? I get that, but this is a pretty strong move in a short period of time. So the higher high would have to come all the way up here. So I'd prefer to see whatever the case is and then break. So that's financials there. Interesting. Much explosive. Oh, nice short there, Moonraker. That's good. Good stuff. You think that this, Jason, think that this week will go to red? I mean, if we have some bad earnings, I guess that's always a possibility, or the market perceives it as bad. But we've moved. We're up at the upper weekly expected move already. So that would be, if this week turned red, I mean, that'd be a big move, man. That'd be about 100 points, right? Don't rule it out. Shoot. Now, I would say that it could be potentially hard unless if we get some crazy gap. But see the swing low anchored VWAP right here? See, it's right here, actually. And that's actually above where we started for, well, okay, so my bad. We started the week up higher. So the last week close. So last week close is actually the swing low anchored VWAP. So you'd have to come way down here. That'd be wild. That's more than 100 points on the SPX, I think. Yeah. That'd be a big turnaround. I mean, being in negative gamma territory, it's always possible, but we're above a 5-day moving average. It's neutralizing, so bullish with caution, and we're above this swing low for the month of April. We're above the week to date. So if we were to pull back into this area, I would see this more actually as a buying opportunity if we were to come down here. I wouldn't buy into the weakness because the weakness can become weakness even more. But I would be like, okay, if it comes into here, like at whatever point, and then all of a sudden it starts to flatten out and then turns back up, I'd buy into the strength
revenue at
of it turning back up,
million,
right?
Versus,
because if I'm just buying weakness, I mean weakness goes into weakness. I'd prefer to wait.
Excuse me, 639 million versus.
Hey, you never know, man. You never know. You can't rule it out, man. You have to always be open to the possibilities of that kind of stuff happening. But when I look at the chart by itself, I say, okay, am I going to position a trade for that right now? Me personally, because I trade equities, I wouldn't. But if you believe that, hey, you have all these positions on or whatever, and you're like, hey, I'll take, a spread or something like that. I'll do a spread of thinking that it's going to close it. Then maybe there's something that you can do there as part of an inventory against other positions. But like, I wouldn't be like, okay, my portfolio is where it's at. I'm going to go full bore. I'm going to switch it all because I think it's going to come down, which I don't think is what you meant at all. But Just get an insight there. Okay.
ASMI affirming their revenue targets for 2025.
Okay, so we're floating in and around. You can see that they are still kind of like stair-stepping some of this liquidity here, and it's really kind of pinching between these two levels. It feels a little tiny heavy right here. Okay, it's feeling a little heavy, but we still have the supportive bids underneath us. So if we're gonna fill this and come and break the daily VWAP, I mean, if I look at just Gamma by itself and kind of how it's been setting up from a 0-day perspective, remember, we still are the call walls over here, and prices can get pinned in this area, and that's 50.45. We did go out to 50.75. We came up here, but traders didn't really reach further. And as they're not reaching further, we're around the weekly expected move. It makes sense to come in, right? Or, right, to trade in around their happy spot. You know, they're fine right there. It gets crazier if we get outside of it. Market net flow, bullish divergence, but remember, we've lost convergence. I mean, we had a little pocket right here of green, but basically we've lost it since in and around this area. So what is that, 11:30-ish? Okay. So 8:30 my time, right around here, right about here. Okay. And since we've lost it and we're still, you know, no convergence, well, it looks like it might gain it back. Who knows? It's kind of chopping in and around here. It looks like it's about to gain it back. If it gains it back, yeah, that could be a potential good sign. But market's been kind of just going sideways, consolidating. Could be flagging, right? And it makes sense too, because look at this move. We had a gap up, follow through. All these are 15-minute candles into the weekly expected move. So do you chase it up here? No, you wait for the consolidation. It's consolidating. And the longer we consolidate it up here, the more this is going to turn up too as well. Cool. We're right there, right back at the weekly expected move too. Look at Bookmap. Yeah, see, you see it lighting, kind of lighting up here. This is just very weird price action. This is like lunchtime price action. As it's coming up, like, do you see how it's kind of just clear blue beneath us here? If it's clear blue, it can easily come right back down. You'd have to have supportive bids that come in. Not really a trade-worthy environment, in my opinion here. Does open interest affect the probability of an options reaching its target? I think that's all, yeah, definitely possible. I mean, it's an important metric. I don't think there's one metric that like will be more important necessarily than another. I think it's kind of a combination of multiple assets, multiple tools. But open interest is of importance, that's for sure. It shows where people are focused. Yeah, it's got about an hour before that auction. Oh, there's a little chop fest here. We are getting, do you see that? So we get a little bit more supportive bids right here as the market's kind of just filling this liquidity overhead, a little bit. Now we're back to the upper weekly expected move, flowing around here. Let's go for it, man. That'd be great. Imagine just going back to the month-to-date lower EM. I'll probably remove more of my position at that point. And then I'll just look to, if this is like a little flag right here and we go like this today, I'll probably reduce more of my position that I have, that I talked about earlier. And then I'll just wait for it to consolidate and set back up again. I wouldn't really be pressing it too hard after a nice rip. Wouldn't care if it goes higher, wouldn't care if it goes lower. I'd just be waiting. But right now, it's just sideways price action. Okay, I'm gonna pull up my tight list and see some updates here. The tight list is something that I share with the Discord group. It's my watch list, but I go through my watch list. I go through so many different names every single day. Every single week, sorry, and day. And I basically, it stocks from the, oops. It stocks from the watch list that are tightening up.
CEO Diamond of JP Morgan speaking in New York here. Starting to see some initial comments coming through.
Okay, sorry, I'm pulling up on my side. So I'll show you guys this tight list this week. If you guys are interested in it, you can. And so I know a lot of you are already in the Discord, but I'll show it because it's. I post this in the weekend, and now it's already Tuesday, so I don't mind showing some of this looks like. It's stocks that are tightening up. This is what it looks like. It's just the. It gives some ideas. Think of it as just like think of this as really just a, I would say think of this as a scanner in a way. I mean, I scan thousands and thousands of names every single week and weekend. And then I put stuff that I like in my watch list. And then I go through go through it again. I call this the tight list, and it's stocks that are from the watch list that are contracting, and I'll just update it once a week. So we'll go through some of the names. Right, it's already been a couple of trading days, and by tight it means like I'm looking for bullish sentiment that can follow through to the upside. But when it tights, it can also expand to the downside. But the tightness allows us to see a good risk to reward. So if it breaks down, you don't take the trade. I mean, you can. I don't. You can do whatever. So some of the names here. This is the first page. Like RTX, like some of these, like you have to go through them and make sure you know when earnings are going to happen and so forth. So we'll just take a look at some of these names. CPNG. So CPNG, oh man. CPNG was nice little tightness here. As it was pulling in, we had 2 days of upside. Little breakout of this little tight consolidation, retesting these highs. So that'd been a nice little trade there. Small, but it's still really kind of consolidating its run up right there. Markets NQ is roughly around highs of day. S&P 500's recouping some of it, coming back into and around that 50.75 level. So there's CPNG. RTX, I think RTX reported earnings. So let's see what that is. RTX was tightening up into earnings, which makes sense. So RTX still looks actually pretty decent. This was earnings on RTX, and RTX is still kind of going sideways here, right? And it's holding up rather well. So yeah, we're getting some loose and wild price action over here because of earnings, but so as it stands right now, still potential good setup here if it can hold this inclining 20-day and hold the lows. But you can see here, price action is just kind of going sideways in a bullish context. We had this breakout from way back when, follow through. So you would think that, we can retest these highs at some point here, which was from today. So a new 52-week high there in RTX. VITL, nice little tight consolidation pattern here. Let's see what's going on there. And you got to always check the volume too, right? You got to do due diligence here. But VITL, nice little tight pattern. We broke out yesterday, hit a new high, came in a little bit, right? A lot of market volatility. And today we're getting some follow through to the upside here. This is a nice little tight consolidation, right? So you look at this and you're like, okay, if I were to play it, you play the breakout, boom, it breaks out. And then you have a tight stop loss, right? So even if you were to say, hey, we broke out and came back, you could have had a stop loss at the low of day. and it could be a break-even trade or close to a break-even trade. Or, you know, if you didn't get stopped out, you'd still be up, and it's up 4% today. All right, and who knows, like, if this is going to start breaking out further or not, I don't know. But do you understand, like, why tightness, you know, contraction leads to expansion? So these are just some of those names, kind of what's taking place. Progressive, it's I put this in here still because of the breakout. It technically wouldn't be on the tight list, but I figured I'd put this on the radar because I saw a lot of insurance names, and this one did break out. So it's kind of like, I was like, I'm going to keep it on there because it broke out of a tight contraction and it was 1 day over. So let's pull up PGR and see kind of what that's doing. Now take a look. So it broke out of this tight contraction. Now it's contracting even more here. So insurance names have been looking good. So if this tightens up a little bit more, I mean, we could probably take out this high again and maybe go for a 216 now. Earnings is not too far away. They're for Progressive. PPC, Pilgrims. Still just kind of going sideways. Broke out of its little tight pattern here. Pulling in a little bit, but still in bullish context. A little bit of a reversal type candle here and some follow through to the downside. Earnings not too far off there. NQ still floating around these highs of the trading session. Market net flow did go back to bullish convergence. It still has its bullish divergence, and the market started going up basically around that time. So right around here, the market's seen a little bit of up action. That's positive, and we're just trading in and around that weekly expected move. We have about 40 plus minutes to go to the note auction. We'll see if that brings in market volatility.
Tesla noting they're launching a new Model 3 performance model today. Tango Circle Alpha.
All right. We'll see if that does anything to Tesla. Tesla new Model 3, they said. Tesla's actually outside of its opening range, and we're putting in higher lows, and we're kind of butting our heads up to this previous high. Doesn't look too horrible right here, to be honest, but it's just you have earnings after the bell, unfortunately. Still under a declining 5-day moving average. Aurora Cannabis, ACB looked pretty nice. This nice little kind of a flag pattern was. These ones trade, they trade strange, but we'll see if ACB did anything. ACB, yeah, look at this move. See this nice flag pattern or whatever? Look at this follow through today. It's up 13% on the day. This is just, this goes to show you, man. I mean, like telling you, contraction leads to expansion. If you catch a couple of these names, it looks great, right? So Aurora Cannabis, nice move there. I'm sure that MJ was affected positively here. Seen a little bit of a bounce there. And MJ up 4.35%. MSOS up slightly on the day, but not nearly as much.
No, for Tesla, this Model 3 performance is going to start at 52,900 and be coming at all-wheel drive.
It's still talking about its Tesla stuff. So and sometimes there's a lot of names. Sometimes there's a little bit of names. I even put BYON here. It's clearly an expansionary move to the downside, but there was a very clear trend line here, and it looks like, hey, if it breaks, we might see like a 5-6% pop. You know, very short time frame, kind of like how Lululemon performed. So let's take a look at BYON and see if that occurred. It's up 5.5% today. So it was basically very flat to down yesterday. And then we had the follow through pop today, up about 5% on the trading session. And you know what I meant by the downtrend, like it was just such a steep downtrend. These type of things happen. You're pulling into very key levels where you saw moves before. And these are, more aggressive tactical trades, just like Lulu was, right? Lulu is more of a tactical trade, get very tight. So if we break the trend, it might continue out to the upside a little bit. You'd have shorts covering the rally, right? If they were short, they'll look to cover. And then maybe you have breakout traders or momentum traders, and it kind of exaggerates the move to the upside. Doesn't mean that this is the bottom. It means that we're bouncing, and you got to just respect that. It can go way up here, right? But you don't know, so you got to manage the trade by putting stops at the low of each day, or take profits, or it just depends on your position and how you position yourself. We're sitting at around highs of the day there as market net flow went back to that bullish convergence. S&P 500 back to around 50.75. Let's see if anybody's reaching out further here on zero date. Not really. 50.75. And NQ, a new high of the trading session. Are we breaking out of this little flag pattern, or are we going to just break out and come back in and doodle around a little bit more? No one knows. Nobody knows. Musk is trying to push some news to make people forget about earnings. That's pretty funny. Sheesh.
JP Morgan, Diamond saying that there's a chance stagflation could happen again.
Oh my gosh.
Diamond saying there's a chance
Here we go.
could happen again. Speaking
Jamie
of
Diamond's talking.
New York.
So I'm reducing a little bit more my S&P 500 position. It's like I said, it's a leverage position. I don't really need that much on. On the ETF, I don't mind putting more at stake. On individual names, I kind of get I don't even bother with that. But on like S&P 500 or even a leveraged S&P 500, I don't mind putting a little bit more at stake. Just got to know your assets, right? How they move. You look at implied volatility. You can look at historic volatility like ATR. Hey, FT Trader. Have a safe trip to the airport. Thanks for showing up. Moonraker obviously responds. Oh, bruh. So levered, I use this last one. It was way leveraged. It was like the 4X's, which is 4 times S&P 500. And I'll explain why first, because I can use, it's a cash account, right? So if I did the size position there, a lot of my cash would be locked up. So I just use that. I wouldn't recommend it, especially holding it for too long because of, decay. But there's SPXL, I think it is, or yeah, SPXL is 3X, and this is much more like liquid, I think. I believe this is a much more liquid product. And that's a 3 times, plenty. And then like if you use like Qs, it's like, TQQQ or SQQQ, to name a few. When I use one of those leverage ETFs, I'm like in and out probably within 3 or 4 days, sometimes less. So yeah, BYON. Some of these oil names like PSX and VLO, they've been just pulling down and flagging. And that kind of interests me because we had inside trading days on Friday. So, let's see what happened there with these. So VLO was one of them. So it was an inside trading day here, and we're kind of just going sideways. Not really of a break yet. Was it VLO? What was I looking at? Yeah, VLO and then PSX. PSX doing the same thing, holding its 50-day, kind of breaking up further. So a little bit more to the upside. It's breaking outside of this candle, so you'd want to stop at the lows if you're in these type of names, these energy names. Remember, when energy outperforms the S&P 500, it's not really that great for the S&P 500. I posted a chart, the updated chart on that on Twitter. If you're not following me there, you can follow me there, because sometimes I post charts there. We'll pull up some of these names actually. Some of these actually turned out really well. Even one of the small little downtrend in the S&P 500. Like, it was so clear as day. So we had a downtrend in the S&P 500 for the entire week. Made complete sense to me on this 15-minute time frame. And we had a positive divergence in the HYG. And I was like, dude, if this trend breaks, we can probably see that pop. So, I look at that as like early entry type of stuff. Let me see here if I can find it.
JP Morgan CEO saying the U.S. economy is unbelievable and booming.
I don't know, man. I don't feel like I'm booming. I feel like I'm just getting picked apart left and right by like higher prices and higher everything, man. Even if you make good money, it still feels like broke, Booming. Like in what like I just like booming for who exactly? Like who's like literally legitimately like I'm booming and doesn't look at everything around and be like, yeah, I'm booming, but I have to be booming because if I wasn't booming right now, things would be bust. You know what I'm saying? That's how it feels. I don't know.
Diamond saying, even if we were to go into recession, the consumer is in good shape.
That I believe a little bit more to an extent. They're in decent shape, but when you really start breaking things down, though, unfortunately, it's not quite the same story. Right? Because you look at like credit cards, delinquency. So the when you say you're in good shape, it's like, okay, there are people that are in good shape, but the people that aren't in great shape will feel the blunt of it even more than they are right now. And then the people that are feeling hardness, even that are doing good, will feel hardness too. So it's like it's like barbell economy, right? Like it's just kind of how it is. You squeeze out the middle class. Is it a time to accumulate the SQQQ? I'm not much of a shorter, to be honest. Like if I was getting some SQQ, it'd be against some long positions, or if I was looking to short the market. I mean, this could be just a bounce before we go down. It's just I don't feel like I've always made money easier from the long side, so I've lightened up the load on shorting anything over the years. So if you are in the Discord, you can go back through all my old trade ideas, all those charts, dude. It'd take a long time to find a short setup. Maybe not that long, but I can't find that chart,
Private
dude.
Equity News, Apollo, Searchlight, and CVC said to be vying for M Group services.
I'm looking for this chart here. Keep that going there. Where are you, little chart? 144. Oh my goodness. Holy macaronis. I'll probably have to just recreate the chart because I can't find it anything. I thought I saved it. I thought I saved you. All right, I'm gonna just build up the chart. I'm gonna just show you the chart actually of on Twitter. Oh no, I'll just build it out. Screw it. It was like a 15-minute chart. It's like 10 days. Off, full quote. In there, turn this stuff off. I wanted to show you just like how clean this was because it was very clean. It was super simple to see. And I couldn't make a market brief, so I just posted some of these charts on Twitter. Make it easier for everybody. 10 days, 15 minute. I think it was a 15-minute chart.
Bearing executive saying his company is not expecting much better trend in Q2 for Gucci.
Gucci, Gucci, goo. Gucci, Gucci, goo. Okay. Oh, it's going to April 1st. That's why. There. Okay, now I found it. It's going into the wrong chart deck. Okay, so sorry. Here is the chart. Here is the chart. Oh my goodness. Okay, so this is the 15-minute time frame for SPY, right? And this is the start of last week. Oh, we gapped up. Okay, and this right here indicated like this trend right here, okay? So if you put in a little line, okay, you can watch it, but that was kind of early anyway. This was noticed later on. And notice how SPY hit these new lows. Now, if I bring up the exact chart, but I use HYG, okay, HYG, the same time frame. What the hell? Notice how, okay, notice how here, April 22, how we hit these lows. April 22 is right here. And what is this? These are higher lows, right? Smart money. Okay, SPY, new lows. HYG, higher lows. Trend line, completely and utterly was just watched to a T. So this is some basic technical analysis of a trend. And then come Monday morning, we gap up through it, consolidates, guy pulls back a little bit, and then all of a sudden we boom, boom. Explosive move to the upside. And now we're trading where? We're trading back where this volume was at and the weekly expected move. So if you follow on Twitter, you could have saw this, but those, you know, just some random stuff that, you know, you can notice there on the shorter time frame. And dude, these play out, they happen. I mean, it doesn't have to happen exactly, but I mean, if you're looking for a bounce, these are some indications. People stepping back into high yield shows that the bond markets want more of a risk appetite here. Okay, and then the SPY keeps on selling off, but it's following a trend line. So it's like, okay, if this trend line breaks, can we see some price action to the upside? And you know, we did. Pretty cool, huh? Pretty cool, huh? So what are we doing now? We're just trading in and around the weekly expected move still. We go up, we go down. Market net flow is bullish convergence. Bullish convergence, bullish divergence. So that means market's moving with this price action. This is positive. Once again, going to what we said earlier in the trading session. I don't know where we were, right around here or something. I wouldn't short this. Don't short it. Don't bother shorting it because you can get chopped up or it can just play around the weekly expected move and you just don't know what's going to happen. Market net flow is bullish. The gamma still from a 0-day perspective, they're starting to reach a little bit further to 50.75 as the market is kind of, I mean, we're basically there. We're at 50.73. On Owanda, on CBOE though, it's a little bit different.
Pitching and potential.
We're, you know, 67, so 75 is
Sierra November Yankee.
Sierra Nevada Yankee. Yankee Danky. 75 is up here, so excuse me. Excuse me. 50.75, and I mean, geez, it looks like we can get there, right? So we're seeing this low, a higher low, getting tight price action here. So we're going to get an explosive little move to 50.75 on SPX. I mean, shoot, market net flow is suggesting it. That's 6 points higher, so, you know, something like that. About 30 minutes to the auction.
Axios reporting.
And Q sitting at around highs of the trading session
this weekend.
Getting a little bit move, new highs in S&P 500 for the day. Boom, new highs there. We love it. We love to see it. ES trading in and around this liquidity here at 51.10. DY, that's Trade the News in the background. Trade the News, just in case if anything comes out. See like how like we got some interesting, so ASM International European macro stuff dropped out right there. We had JP Morgan come out. CEO Diamond said some stuff and the market kind of rallied from that point. Interesting. I don't know if that's, I mean, it's technically a headline report and he's still there talking. So let me see. So he sees the chance stagflation could happen again. Economic Club, this is from the Economic Club of New York. Oh my gosh, that's a fancy club. My pinky is up while I drink my champagne. Geopolitical situation is most complicated and dangerous since World War II, is something that he stated. U.S. economy is unbelievable and booming. Even if we go into a recession, U.S. consumer is in good shape. I am cautious on U.S. soft landing. I don't know, man. looking to eat up this liquidity up overhead, 51.10. We have quite a bit of contracts there for 600-700 contracts up there. Yeah, Bookmap looks good. I mean, everything looks healthy. Everything looks healthy and fine right now. Market net flow looks good. The 0 date, reaching out for like further out in the 0 date world, they're not really doing. So I think the market's kind of just dragging itself higher here. Like notice how they're not really going too far crazy outside of 50.75, but they are reaching more for 50.75. So, I mean, if they reach further, maybe 50.85. My market net flow, once again, bullish convergence, bullish divergence. That's positive. It kicked right back into play right here. And the market started flowing back with it. So everything looks good, but when you really take it into consideration, we're at where we're pressing pretty high where price came from. So establishing a new position here. Can we go up to this week, month to date, lower EM or potentially further? Yeah, absolutely. But I mean, we're right here at the weekly expected move. So to come back in, to doodle around, to go like that, like whatever the case is always possible. Now, if this auction comes out, or if we get great earnings on some of these names, maybe the market just says, let's rip right back. Where can we go to after that point? Well, I would say pay attention to the anchored VWAP from the start of April. So this is the month to date anchored VWAP up here, April. And we've been basically below it this entire month, a couple pops above it. But, retesting these levels always makes sense too.
Spirit Airlines announcing agreement with CPAY TA Connections for optimizing baggage operations and reducing costs. Charlie Papa Alpha Yankee.
Charlie Alpha Papa Yankee. Yeah, this looks like, just look at these. So a low, a higher low, and it's like kind of just like coiling up here. It's like getting pretty tight, the price action. Now, it could be getting tight because it's lunch hour, right? So we get a lot more kind of sideways move, but I mean, even that, like it's getting pretty tight here. So perhaps see some stronger moves. Like we saw like liquidity breaks here, some stronger moves. So it feels like we're kind of nearing that time where we see somewhat of an explosive move here. This is NQ on a very short time frame. And we're kind of trading in and around that 50.75, right in that area there. This is a 0 date level. I'm not confident to go long, and I'm not confident to short. I'm just not interested in shorting at all right here in this context. This is what I mean by like, you'll look back and it'll like be so obvious that you're gonna have a trend day. And this is pretty obvious stuff right here.
Jamie Dimon saying he believes smaller banks should be allowed to merge, repeating what he said in the past.
Your NVIDIA calls are dying? Whiskey Tango Foxtrot. It's too good, man. Too good. Trady ticks at 50.85 all day. Yeah, Trady ticks is actually really nice too. On which part, Moonraker? Are you talking about SPX right here? Right here? I'm assuming 50.85. The thing that I like about Trady ticks is because they take out a lot of the noise.
Judicial order to rehire Tennessee workers who
so 50.85
unionize
is the magnet there on the 0 date. So yeah, I mean, shoot, dude, you never know. It's a strong possibility, right? It's just another data set. Let's go over to SPX 50.85. That'd be way up here. Holy macaronis. Hey, but here's the reality of that is when the reason why I say this is more than possible is because look at market net flow. It's supporting all of that. So then you look at 0 date and people are reaching here to that magnet, which price attracts, right? There's other magnets here throughout that process like 50.55, 50.65, but the big focus there, look at this order that came in right here. Look at these orders on the 0 date flow. Those are some monster orders that came through. That could be trend continuation type of stuff right there. So the reason why I say these numbers could be possible is simply because market net flow is supporting it right now. So 50.85 on Owanda is up here a little bit further. Getting a little bit, a little kind of loose and wild right over here. But me, like if I didn't have a position already, like I would look at this and I'd be like, I'm not going to execute into it, right? And that's the thing. That's the unfortunate thing about like rip your face off rallies is that is typically, if you're not in it in the early stages, you're going to sit there and you're not going to be in it. So for example, like if I look at SPX on the daily time frame and I go back, because we're coming off of a pretty substantial rally, this rally right here, like good luck getting into it if you missed the entire thing. Right? Maybe there's a couple opportunities, but maybe you thought, okay, now it's over, and you would have been gravely mistaken. And then you try to like catch a short and it goes down and you end up getting out too fast. All right. And then when it starts bouncing, you're like, oh, now I can put on a short, but then it starts ripping or something like that. And this is what I mean by these environments are way too hard to have a bias, right? Being short or long, if you have a short bias, long bias, and you're building positions based off of just a belief, and you're not reacting to what price is doing, and you're adding to these beliefs, like averaging into these beliefs if you're wrong. Oh man, watch out. Watch out. Be dangerous stuff. Right? And here's the reality. Like you could have looked at this and be like, oh, it's over, it's game over. Well, dude, what if it rips right back up here? Like, and it does so in this fashion, doesn't even pull back. There's going to be so many people that miss this, that stopped out here and then try to short it on the way up and then cover, and you get these exaggerated moves in an environment where you're in negative gamma, right? Gamma flip lines up here at 5120, people. It's going to update tomorrow. But yeah, 5120 is, far away still. We're up 1.17% on the day. We haven't seen a 2% day in the S&P 500 for quite some time. And maybe today. We almost did yesterday. But the thing with yesterday was aggressive selling came in later. Monday, you get this strong move, and then it got kind of aggressive to the downside here. Nothing crazy if you're looking at like larger time frames. Losers average losers. Yeah. Sometimes they get lucky, or maybe it's just a different strategy. They're just averaging, 401k, just adding, or whatever, or just that's a whole different strategy. That's more like, hey, I'm not looking for what's going to be price is going to be next month, next 2 months, next year. I'm just on any dip, 5%, 10%, whatever. I'm just adding to my portfolio. It's going to be there forever. A lot of people just do that. They'll just have an account. They say, this is my forever portfolio, and it'll probably be passed down over time. And I'm just going to have it, and I'm just going to add to it, and I'll take dividend payments, or I'll take some out during retirement or whatever. But it's going to be it's going to be there forever. I focus on the shares, not the price. That's all. This is all different positions, and they're not wrong for doing that. It's different strategies for different people. And you can have multiple strategies. You can have a short term where you can be a little bit more leveraged up and be more, aware of risk, or you can not have a leveraged up portfolio and you can just add to it and just have one for the long term. And you can have both. You can have a day trading, you can have a swing trading, you can have a long term, and you approach them all differently. There's been plenty of times where I swing trade and I'll take my profits and I'll just put in my long terms, and I just don't even care. Like there you go. There's the portfolio. Or, you make $400 or $500 or something on a trade, or even a swing trade or whatever the case is. And you're like, hey, I can buy one share of the S&P 500 and hold that forever. You can think of it all kinds of weird ways, all kinds of different ways. End of day sell-off in preparation of Tesla. Yeah, maybe. What's Tesla been up to? Yeah, look at that. Kind of noticed that it was kind of tightening up here with these higher lows, and we saw that little pop right there. Tesla's up 3% on the day. Oh my gosh. 1 day separated from its lows, coming into earnings. Got a large expected move for earnings. $15 expected move for earnings now. We'll update that more towards the end. I don't know if I'll be here, but we'll have to update it when I get up, before I get off. Did I buy the market Friday after the close? I'd have to look, man. It's been a weird week. I know I executed into, I got an S&P 500 position. I dumped some of it today. I don't know. I'd have to look. I still have S&P on right now. I still have a little bit on. It's actually kind of still sized up, actually. It's still a little bit big of a position, given the context of the dollar amount and then also being leveraged. So I probably will look to actually cut it a little bit more into this close, depending where price is. Maybe even into the auction, honestly. We have 20 minutes till this auction, and we're at highs of the day. Like I said, the higher probability is still going back into the month-to-date anchored VWAP, or sorry, month-to-date expected move. But this has been a pretty strong move. Actually, yeah, I'm just gonna, like I'm gonna load it off a little bit more again. I don't need that big of a position right now. Not where price is at. All right, now it's a little bit more neutralized. It was a decent sized position, but now I'm treating it as just a regular equity, regular swing trade position. And then if we can get up here, cool. And then I'll just have a stop at low of day for today's for the remainder balance. NQ, so S&P 500 made a new high here, and NQ did not too long ago, but it's kind of floating sideways around in here. So if NQ starts to come off a little bit, it's getting a little loose and choppy. Market net flow, still very nice look here. Bullish divergence, bullish convergence. 50-55, so, we pointed out the 50-85, but take a look here what just changed. 50-55 now is now the strike, so that is the magnet there on SPX. So if I go into SPX, now that can change again really quickly. 50-55 is beneath us, down here. Okay, and then you update your my gamma levels, 0 date. Still not really reaching out further here. 50-75 and 50-45.
The Secretary of State Blinken reportedly will visit Saudi Arabia this weekend.
Take a look at the book. Book map's getting hung up right here at 5110 still. Still that liquidity overhead. And it's kind of clear blue waters beneath us. Maybe down here at 5100 we have a little bit of something. So market net flow is kind of just pushing us, but we need to actually have a little bit more now. Some support beneath us to really start, let's gobble this up. Liquidity, there's over 600 contracts here. We eat that and all of a sudden volume steps back in. $51.35 was added overhead at 8:30 about an hour ago, 11:30 Eastern Standard Time. 555 contracts up here. Maybe that's where we're going. The longer that these stay here, the more likely it is to eventually fill. It hasn't been there long, but it's been there for about an hour now. I like it when they're there for weeks. And these supported bids beneath us right here, the daily VWAP, still have held. Added here on this pullback, basically. Pull back here, and we added a little bit more right here. So stair stepping up. Getting a little bit more liquidity there, 5100 to 5102. Not much, but at least it's something, right?
Smart glasses to support its warehousing operations.
A lot of blue beneath us.
Victor Uniform Zulu idea.
As the market's just trying to eat that liquidity overhead. It's not too far off, man. Just give us a little bit of a push or something. A little bit of a push or something. This red, Colby, the red above us can technically be resistance. It's literally orders that are sitting waiting to get filled. So, the saying goes, if this is where, people are going to sell into, or is there going to be enough demand to outweigh the supply to keep us continuing to go? Or is the supply, when it gets filled, is the demand going to go away and all of a sudden look back down beneath us to find out where more demand could eventually hide? But they keep on, you notice that light up right there? They're kind of adding supply overhead. So if there's not enough demand to outweigh this, then supply just kind of sits in and people get out, or whatever the case is, and then they start to look to where demand could be. And it could start sinking off. These aren't gigantic levels by any means. This level is somewhat noteworthy given the context of 400 plus contracts, and then right beneath it is about 300. So that, this is more noteworthy than anything. But beneath us, there's really nothing. So if the buyers, if they give up here and you have all this clear blue water beneath us, I mean, we can just see a quick liquidity break. But the dealers are currently flowing right here. Look at the cumulative net premiums for calls, puts, everything suggests higher prices right now. That's what this suggests. Even if we have a pullback, I mean, it still suggests if this stays green and this stays the beautiful divergence right here, this is a trend day higher. About 13 minutes to the auction. Keith, NQ book map, I can pull that up, but I always look at ES because it's just a little bit cleaner of a picture. And you got to understand, like, it's, they always have somewhat of a tight correlation. I just always like ES because it's just cleaner, smoother. Okay. So as price is pulling down here in NQ, this order came in and that's kind of supported the market there. That's a 17,585. You got 108 contracts down there. That would be the one to watch. Beneath us is the 17,585. Then we have 650. We have 71 contracts up there, but we're still kind of fighting through all this stuff here. Kind of just chop. Algo spike, moving around like crazy. You see what I'm saying? Like it's a little bit like not as clean. Just algorithms, dude, moving price. You see this? So I would pay attention into the other levels because these things move just hand in hand. They just move, constantly changing quickly. So the bigger levels I'd pay attention to would be like the 108, the 585, and I guess 650 up there. This is decent size. And you can see, see how they stair step it down and then they pull liquidity from beneath us. They're pulling. Then they add. Well, when they all of a sudden get, you see, okay, so when you notice that, how it's kind of quick. Now I can't trade that quick. You can even pull into tick charts, and you could zoom in even more, right? I ain't got that type of quickness. Now ES, you notice how these ones, you can see these levels kind of just sitting and waiting. It makes it a little bit easier to see how the market's going to react and respond. Preparing for tomorrow's big sell-off. Going nowhere rest of the day. Yeah, maybe. I don't know. I mean, what would be a big sell-off? Like back to the week start of where we started, or would we still be up on the week? Like, would this be a big sell-off coming back down to the 5-day moving average and being above the week-to-day anchored VWAP? Would that be a big sell-off? Or would a big sell-off be new lows? Like that to me would be that'd be pretty notable. A big sell-off would be back down to the lower weekly expected move. Even if that was the case, the week would still be trading exactly how the week said it was going to trade within its weekly expected move. Right now, we're outside of it. So the higher probability is that we come back inside of it and trade around. Even if we go out further, it's still a probability that we come back in. New lows? No new lows. Oh, no. Oh, new lows. Tomorrow, you think tomorrow's going to go from here down to here? 430, 493? That's pretty wild. It'd be a big move in one day. I mean, what do we got going on tomorrow? So after the close, so tomorrow we have, we got Visa and Tesla reporting after the bell. So I don't know if that's really going to move markets. Maybe it is because the market responds to basically everything now. But then after Wednesday, we have Meta, IBM. So I mean, if we have horrible Tesla, horrible Meta, yeah, maybe we do clip it. But then we have Thursday, Microsoft and Google, and these have been strong names. I don't know. I wouldn't be placing bets like that was going to happen. I'd just be watching market net flow, and it'll tell us if it's going to happen. This is going to be the flip flop. It's going to be red line up here, green line down here. It's going to be red all day. That'd be the only way that it's going to happen. Only way that's going to happen is if market net flow supported that type of a move. But if it looks like this tomorrow, it ain't going to happen. Won't happen. Not that big of a move. Maybe. You never know, dude. Tesla starts it. Yeah, maybe. Tesla already, Tesla hasn't done anything though for the market. You know what I'm saying? Like Tesla doesn't have the pull that it once had. Like I can tell you that because look at the S&P 100. If you go into the S&P 100 and you look at the top names via market cap, Microsoft, Apple, Nvidia, Google, Amazon, Meta, Berkshire, Lilly, AVGO, Visa, JPM, XOM, Walmart, and then Tesla. Yeah, Walmart, it's a bigger market cap than Tesla now. Tesla used to be in the top 7. So it's still, almost 500 billion or whatever it is, or market cap, but it's fall from grace, from there. Now, the market has been responding to a lot of these earnings, so you never know what's going to happen there. But new lows today on the year, or yesterday on the year. So
France is carrying on their call saying that they see.
And then while Tesla was at new lows basically all year, SPY S&P 500 has been at highs for basically the bulk of the year.
Romeo and France.
It wasn't until Microsoft got clipped, Nvidia got clipped, Google barely even got hit, and Amazon got clipped a little bit here too, that we actually saw the market move down a little bit. So I mean, be open to anything. I wouldn't be placing my bets on it. Like I would just rather just not make money to the downside if that was going to be the case. I'd rather just protect my income or protect my portfolio. That'd be my move. But yeah, you're gonna see this or whatever. You're gonna see pullbacks, but for this to come take out this low tomorrow, it'd be a big one, be a big move. Sure. We don't even know where today's going to close, too, by the way. We can close back in here, and then it could be very on the table, right? My idea is if we get a pullback is to watch for the 5-day moving average, the week-to-day anchored VWAP, and the swing low. So if price actually did get a substantial pullback, I would be looking for strength after that. I would want to see, I wouldn't be buying into like the weakness. I would look for a turnaround, and I would prefer market net flow to be somewhat supportive of that. Maybe like even if it's bearish divergence, there's no convergence, and then we start to see a bounce or something like that. And then I'd be looking for that because I would want to play the turnaround. And if price is going to go higher, that's what I would be looking for. But if it undercuts it, if it comes down this way and then bounces and then undercuts it, then I have like, okay, here's my risk, and go ahead, do whatever, and I'll continue to wait. Now, if it gaps down under all this stuff tomorrow, I would just sit around and I'd wait. I just wouldn't even bother. My book is, my current book, dude, I'm at all-time highs today. I'm at all-time highs in my portfolio. I'm not looking to trade to the short side to get my face ripped off or try to make money to the downside. It's all about just kind of now sitting on my hands and just being patient. We're above the 5-day moving average. That's good, but we are still in negative gamma territory. So yeah, selling into selling can very well happen. All right, selling into selling in negative gamma territory is more than possible. More than possible. Nvidia coming off a little bit here. Let's pull up Nvidia. The higher probability is back into the weekly expected move. Nvidia is coming up to its 5-day moving average. This one is declining, and be aware that we're just trading inside of this candle. That big volume break, there's a big volume break here. So to negate this, you'd want to close back above these levels. But even that, like, we're just bouncing inside of this prior day candle. So yeah, it's NVIDIA coming off a little bit here. Look at these three lows, a high, lower high, lower high. Crack this area. Watch out for that. We have the auction here in 4 minutes. So, right, we contracted, we broke down. Pay attention to potentially the 1 minute opening range. Just chopping around overall though. Oh. Thanks, Sam. Yeah. Hit the like button, people. It helps the channel. It helps this grow. It helps it get out further. Be honest, like a lot of the views, I'm still getting decent views on some of my videos, but I'd rather just now pay more attention to the Discord and stuff if I'm not going to get the attention out on YouTube. I just rather put more focus over there. So if you can, share it, like it, support it. That's how you can support the channel. YouTube ad revenue is literally $0. Quite literally, it's like nothing. Maybe $500, $600, $700 a month on a channel that has plenty of subscribers and decent views. So it's, the support is coming from my Patreon group. That was able to make me leave my full-time job and kind of transition over to do this full-time. If I didn't have them, I'd just go get a job because I'm not going to trade full-time. I don't want to rely on trading income because then I don't trade the same. I like my trading income for like day trading and stuff like that to just like be little bonuses. You know what I'm saying? Like, that's why I always think of like, oh man, I just want a week worth of groceries in like a trading day. Or I can like buy a little vacation or get like, I don't know, a shopping trip. Just for fun stuff. Thanks, Richard. American economy booming. I'm with you, Mike. Yeah, I know, right? That was weird that he said that. Like I get, like, I'm just curious, like maybe he's looking at some statistics or whatever, but like, tell me you're not like disassociated with like the middle class when you're saying, dude, this economy is booming right now. Like, get off your freaking high horse, dude. Are you kidding me? Like, me and my wife do just fine, right? We do great. But even we are like, every time we go out, we're like, dude, what is going on here? It's crazy. It's crazy, dude. It literally I'm like penny pinching stuff all the time. Because it just feels like, it's like, holy moly, man. You have to make more money. That's not a good enough thing. Like, if you make more money, that's not even a good enough like metric to say that you're doing better. It's like you're keeping up at that point. To do better, you have to make even more money. Or like, I mean, you focus on cutting your expenses, but I mean, you can only cut so many expenses out. And when you cut enough, then you have your expenses cut, but then yet you have friggin' prices go higher.
$69 billion 2-year note auction.
Here comes the bond data. Keith, as far as interpreting the bond auction data, I'm no expert in there, so I watch price. Let's take a watch price. The market will interpret it for us, and you go from there. Who knows if it's going to be a nothing burger or anything, honestly. I have no idea. We can watch a book map, actually, how it responds. You see this little step up there? Little step up? It's coming out.
Out of the 2-year auction, when issue, yield at 4.904%. Hey, Fiven, you just talked about paying $9 for a Jamba Juice. Dude, my brother told me about this, and he was like, dude, do you ever go to Jamba Juice? I was like, not really. Like, I never like, I'm like, dude, I want to go. Unless if I'm like, maybe at the mall or something, I'm like, yeah, let's just randomly get one of these by a Best Buy or something. And then my brother, he told me, he was like, dude, I paid like almost $12. You say $9. I don't know what he got. He said $12, $9, probably $10, $9, whatever. For a Jamba Juice, dude, for a smoothie. George First DB1 in Germany.
For one
fiscal
little smoothie.
Still the Bravo 1 in Germany.
Bro. Crazy, huh? The news voice guy is coming, yeah. They're getting that data right now. We'll see. The market's not really responding yet. We'll see if anything happens. Just get it out of the way. Spend too much on Chipotle and In-N-Out? Hey, dude, at least In-N-Out has decent prices still. Come on. Chipotle, like, used to be, like, good all the time. Maybe it's just the one that's next to me. But now they literally mess up every single time I put it in an order. Every single time has been a mess up for the last 3 or 4 times. I go to Chipotle still. Sometimes one of those easier meals if my wife and, like, I just don't feel like making any food. But it's not like it's not as good as it was. It was just kind of like, it's just kind of like just mush. Like, it's just like one flavor.
Two nodes drawing 4 spot 898%, 77.9%, a lot at the high.
But it's easy and it's like it can be somewhat healthy.
Good to cover 2 spots.
It's healthy. Like, you can have like pretty clean. It depends on what you eat, but. And then In-N-Out, man.
2 spot 16 on the price.
In-N-Out's a treat. I can't eat In-N-Out. Like, it's cheap and good price, but I can't eat there every day. Yeah, you can't mobile order. That's the problem, dude, Jason. That's exactly what I've been doing, is mobile ordering. I have to go in while it's being cooked. You're right. The unfortunate thing is, like, I don't want to go and wait in a line. I just go and I order and I go pick up, and they always mess it up. But you're right. If I don't want it messed up, I have to go in. It's my fault. You would think with Chipotle would be able to just kill it right now, dude. Because just like, look at their stock price. Bring in some like higher quality stuff. Market's coming off a little bit here. Still really nothing, dude. Let's pull up this chart. Coming off here a little bit. So we're getting that kind of expansion and volatility. Kind of to be expected. We're trading right back to the weekly expected move again. McDonald's is cheap, depending on where you are, dude. So it's not where I'm at. I don't know. Maybe it is different prices everywhere, but I went to like McDonald's, like me and my wife, and we got like, we don't get like a lot of food or anything, or even the meals. Like, I try to keep it pretty like inexpensive. Like, if I'm just getting a quick meal. It was a while ago that I went though. But dude, we paid like $19 for 2 people, and it was like, what did I get? I think I got like,
Columbia Central Bank
I don't even know what I got.
GP is
definitely a large fry. Definitely got a large fry. It was delicious. I love eating their fries every once in a while. Sometimes you just got to get a McDonald's fry. They have that nostalgic. And a trick at McDonald's is if you ask for no salt, they typically recook the fries, so it's fresh fries. And then you can put your own salt on it. Or, you know, if the fries have been out for a while, they'll just scoop it and they'll put it in there, and they're decent, but it's still, you know.
Nikkei News reporting, Bank of Japan will be discussing the impact of the yen's rapid decline at this week's policy meeting.
Yeah, you're absolutely right, Dunk. There's a lot of taxes out here in Cali.
It's a report from Nikkei.
I remember when I moved to Oregon, like there was no sales tax. That in itself was a raise by like 10%.
We're seeing a reaction in the yen to this report. Yen has been testing near the 155 level for the last week.
Bonds moving up here. 10-year yield.
For the Nikkei report saying Bank of
Japan
expected to focus on the effects of rapidly weakening yen on inflation during their meeting starting Thursday.
TLT, seeing a little bit of a bid today. Gold, flat on the day, well off the lows. What a move there.
Nikkei saying Bank of Japan is closely watching core inflation as it weighs the timing of additional rate hikes.
Silver, near the highs of day. Yeah, McDonald's fries and a vanilla milkshake. That sounds pretty good. Sucks in Oregon. It didn't suck for me. Man, I freaking loved Oregon. But I got to travel. I got like comped everything. So my experience in Oregon was probably a lot different than most people because it was for work, and it was literally just like, it felt like I got to vacation every weekend in Bend, Oregon, because some of my territory was out there. So I'd get to go to Bend, and then the full comp for like at one of the nicer hotels in Bend, like the Hilton Marriott or whatever. I forget the exact name. And then I get to go to like Coos Bay, which is not that great, but you know, there's a little casino out there, a little whatever. I would not want to stay at night at Coos Bay, so I had to leave. I wanted to leave, but I could have if I wanted to, if I enjoyed that. Coos Bay is just like a fisherman town.
Further tweaks to policy, DOJ wants to carefully monitor moves
with a Walmart,
smaller businesses to raise pay and pass along.
All right, S&P 500 is nearing the highs of day. Seen a little bit of a bid back over here. Let's go, baby. Oh, and then the food in Oregon was so good. Oh my gosh. They had some of the best food I've had. Taco-vor in Oregon. Taco-vor. It's like Eugene, I think, or maybe Springfield. No, I think it was and then yeah, Portland obviously has some really good little spots. Breakfast. I remember getting like this, like one place that had like these crazy good like bacon strips with like they were caramelized and like with these like nuts on them of some sort. They're like, you got to try our bacon. They're like gigantic, thick slices of bacon. It was like a meal in of itself. It was so good. Are the taxes and homeless out of control there? And it wasn't too bad when I was there. Who knows what it's like now, man. It was just like Santa Cruz for me. When I lived in Santa Cruz, it was pretty clean. It was pretty cool. Capitola, Santa Cruz. And it like exponentially blew up over the last 4 or 5 years as far as like homelessness and stuff. But I always felt very safe in Eugene. I don't know what it's like now, but I've always felt very safe in Springfield, Eugene area. I remember my boss was like, Springfield, man, that's the ghetto. I'm like, the ghetto? When I got there, I was like, dude, have you been to like parts of Sacramento? Like, I don't even consider Sacramento that ghetto. But, you know, it's like, he was telling me Springfield, Oregon was the ghetto. I'm like, bro, you are tripping. You are straight tripping to think that this is ghetto. I don't know what it looks like now, but it's just funny to me. It's like, you need to step out of your box. It's like it's like Jamie Dimon when he was like, the U.S. economy is booming and everyone's doing great. It's like, bro, come on. Step outside. Step outside. Look around. Portland's starting to clean up a little bit. Yeah, when I was there, it was pretty clean. So I know that it got a little hectic out there. So I don't know what it's like now. But that's nice to hear that it's cleaned up a little bit because I did see some stuff on the news and it looked a little like rough. But they have really good pockets, you know, they have good pockets everywhere, you know, and I focus more on the better pocket areas. You know, I'm not trying to like get into the spots where like, you know, there could be danger or anything like that or higher crime rates or whatever. Okay, let's see here. Let's look at the S&P 500. Just chopping around after this news, guys. There's not much going on. You're out in SoCal now? You can confirm I'm from SAC. It's the opposite now. Eugene is the ghetto. Eugene is technically the ghetto now. Remember, okay, so Metal Mike. What's that Springfield Mall called, right? The Springfield Mall, is that what it's called? There was like a little like movie theater there that me and my wife would go to. It was like $1. And my boss was like, you go there? Dude, be careful, man. It's really ghetto. And we would go there like, we're like, dude, are you like, it's so funny to me. I don't know what it's like now, but it was just so funny that like, bro, you do not know what ghetto is. But yeah, it could look worse now. Who knows? There's like a Panera in the parking lot. Yeah, dude. Oh, Eugene caters to the, yeah, there you go. Yeah, it could have been all after this pandemic stuff where things got a little bit hectic, huh? Sacramento got all crazy during the pandemic. All kinds of weird stuff was going on. People having to shut down doors, riots in the streets of weird stuff. That was like, I think everyone was affected to an extent. Like they have nothing else to do, so they're like just causing mayhem. We were afraid because our salon's out there, and like a lot of other shops were broken into and stuff. Ours wasn't. Dude. It's fun times. You grew up in Stockton? Anthony, yeah, he's like, dude, I grew up in Stockton, man. He's like, you don't know what ghetto is, bro. Yeah, I got family out in Modesto. I call that the ghetto. Some of them are in Turlock. That's like the nicer part or whatever. I don't even think Modesto is all that bad. There's parts of it though that are like, yo. Like, why do you choose to be here? Like, you're working here. Why are you here? Now I want some hot salty fry. Thanks, Donald. What days and times do you go live? So it's been a little bit hectic in recent, Craig. So I haven't got like the full schedule out. I've been trying to, dude. When I get more like into this, like my daycare for my child, and we get this more settled, where we get more of a set schedule, then I can tell you. I've been pretty consistent Monday, Tuesdays. Yesterday I couldn't because of some problems, man. Just with this whole health insurance stuff and stuff that I talked about earlier in the trading session. So typically Mondays and Tuesdays, and more throughout the week if I can. I enjoy being live. Just sitting out here, if there's stocks setting up or something like that, I'll take some trades here and there. I've been pretty patient, man. I've been pretty lackluster these last, like in the midst of all this volatility, though. Pretty lackluster. You feel, Jason, thinking that Tesla's going to pop. I kind of am in that same boat. I would prefer to see Tesla do something like this, okay? Like, if I wanted to go long Tesla, I would like to see them have just cruddy earnings or whatever, and the gap, like, down, but then close tomorrow, like, at the highs of day. Just destroy and have a big old bullish reversing candle, a lot of volume, and then I'd be like, all right, now I want to see it consolidate and see if we can move up. But even on a gap up, I'd still be hesitant to even play a consolidation. But after all this to the downside, maybe it was the market pricing it in. So now if bad news comes out or whatever the case is, maybe it does gap up. Like, I can't put on a trade because I'd give up my entire edge going into a binary event. Even if I had the earnings, if I knew exactly what they were going to be, I have zero idea what the market's going to do. You know? But I do know to an extent of what the risk can be. So I'll be like, okay, it's like a $14.6 expected move, right? We'll probably be up here or down here. That's one standard deviation. Who knows if it goes 2 or 3? What times, Craig? Typically, I like to be around 7:30. But also to note, I've these last few weeks when I was more streaming more often, I actually gave back a little bit of time that I didn't put into the going out and exercising and getting outside of my house, which ends up turning into not good sleep. So I need to find some more of a balance to come in and still manage to go outside and exercise and stuff like that. So they might not be full trading sessions, maybe just an hour or 2 hours. Some days maybe I can just do the longer streams. I like being here because a lot of times something happens intraday. Let's take a look at the Mag 7. Microsoft up slightly there on the day, bouncing back from oversold conditions from some significant moves to the downside. I did see something interesting in Tesla. They were talking about the last time we've had 1, 2, 3, 4, 5, 6 or 7. 1, 2. Yeah, 7 down days in a row. It doesn't happen often. And they said the last times we've seen that, we've seen gigantic rallies in Tesla. I forgot where I saw that. I'd have to find it. I have literally zero idea, but maybe it was Twitter somewhere. But I thought that was kind of interesting. You have 7 days down in a row, and then you get some pretty big rallies. Recency bias, can you do anything with that? No. I mean, you could, but it's okay. But what we did see was this trend over here, go into the pandemic low, and then you match it to the 2023 low, and that's kind of where we're at, dude. Right here. Look at that trend line. That's pretty crazy.
Counterparty's taking $435.9 billion.
And then you have this trend line above us. I don't know, man. I kind of feel the same way. I feel like we're gonna pop up. but I just don't feel confident enough to actually put money at stake. I mean, if you guys want me to take a trade in Tesla just to the long side, just to do it, I will. Just tell me, dude. Just tell me. It's going to be one share. Excuse me. Market net flow update. Yeah, let's take a look at market net flow. First, S&P 500. What are we doing? We're doing exactly what the market said we're going to do. We're just trading in and around the weekly expected move. We're in the happy place already. Tuesday. What's up, brother? Do it. Buy Tesla. Buy a share of Tesla. All right, you guys tell me, dude. Should I buy one share of Tesla? Should I go crazy and buy 2 shares? I'm not going to short it. Actually, can't you? How can you short it in a cash account? There's probably an ETF that you can do, but I don't even feel like doing that, crud. I just don't. If anything, I'd just be buying it just because. Market net flow did just start to lose convergence here. So bullish divergence, market's coming up, but we did lose convergence here. So this is where you can get those counter moves. So market's pulling in a little bit here, but we're just really just floating around there. Gamma, 0-date level. 50.45 is still the call wall. They started reaching out at 50.75. Now they're about kind of 50.60, a little bit lower. We're just chopping around, people. We're just chopping here, getting a little loose and crazy. Trades kind of been made earlier in the trading session when we kind of moved through this opening range. Positive market net flow for the entire day. Yeah, Visa's going to report on earnings here. Still getting hung up at 51.10. Yeah, Visa. Let's take a look at Visa and Enphase. So somebody had asked that earlier. We'll take a look at Visa. All right, Visa. All right, so we got earnings after the bill. Trade tab. We're going to go look at about roughly a $9 expected move. We'll go 892. 892. We'll go from where we're at. We'll go up 892. About right there. Oop. Yeah, about right there. That's good enough. It's not going to be exact. That's fine. Extend to the left, extend to the right. Duplicate that. Once you duplicate, bring it on up, and then remove these. Go remove. I wish this was easier. Is there a horizontal line in Thinkorswim where I don't need to do that? Like I can just go horizontal line and click? Oh, that would be so nice. ENPH, Enphase. Enphase is still kind of just chopping up within all these averages. Trying to get above the 200-day, but it's just declining down. All right, Enphase, we got roughly a $16.44 expected move. We're right here right now, so we'll go 16.44. Go 16.45. Right here, we'll call that, and we'll go ahead and duplicate this. We'll go like this, and we'll go like this, and we'll go like this. Boom, extend to the left. Oh, cancel. Extend to the left. Extend to the right. Duplicate. No! Go ahead and redraw it. Extend to the left. Extend to the right. A duplicate. No! Extend to the right. Duplicate. There we go. Remove. Remove. There we go. There's the earnings expected move for Enphase. Price level on. So price level on Thinkorswim. What do you mean with the dollar sign? What do you mean? How do I do that? No, what was that? Oh my goodness. With a dollar sign. I have a Mac, so I don't know what that means. I guess it means the same thing as if you had a Mac, right? All right, let's take a look at the SPY. Let's get a little glimpse here of the SPY. What are we doing? We're just right here at the volume point of control in the last 10 days. Just chopping around, people. Just chopping around here. hanging around the weekly expected move, getting a little bit of a bounce right back. Add drawing line and dollar. Drawing tools, right click. Okay, what is going on? Click the drawing tool. Drawing tool right here. Oh, the dollar sign. Get out of here, dude. Are you serious? Let me see here. What's reporting after the bell again, Tesla? Wait, what the? Oh, dude, what? You guys just saved me so much time. Okay, so if I go to the trade tab, it's, you know, 14.59. Oh, but wait a second. Ah, but it doesn't show me. So I'd have to manually like do the calculation in my head. It was 14.59 above that. Or I can, no, okay, I can just do this. I can go from where it's at, basically. I can go up 14.59 because it shows me. All right, we'll go like right here. Boom. And then I can just draw in that level. Yeah, there you go. Then you duplicate it. Wait, no, then you activate this. Oh my gosh. Okay, thanks. Now I know. I'll see if I use it. What are you doing? Dollar sign. There we go. That's the trick. I appreciate that. Tesla doing all right today. All right, we're just look at this, like chop it, chop, chop, chop. I like still being here. If we actually break outside of this weekly expected move, and the you know, we get this whole, you know, this expected move, they're incorrect, and they have to, you know, dynamic hedging kicks in. You'll see it on the very small time frames. Volume will explode, and if volume starts exploding, man, you can get wicked moves. Wicked moves. Wicked moves, man. Cheap viewers, first time chatter. Why don't you get out of here, you spam bot? Price level extend left set as. Thanks, Trader Joe. Buy one, put. Oh, you said you'll do it if I do it? Trading view is a lot less wonky. Yeah, trading view is a little bit easier. That's actually a good point. Just use trading view. I don't know. I get so used to because if I use trading view, I'd still have to use I'd still have to go to Thinkorswim for the expected move. 0 and 2 levels on trade. Oh, yeah. There's a bunch of different ways to do it. I just like to go the long route because, you know, that's just me. That's just good old Mike doing what Mike does, doing everything more difficult than he has to. Yeah, that's fine. What? Okay. She'll go nuts. It's fine. Okay. Let me know. Let me know. Might need to take a break here. We have some people delivering some furniture. Delivering some furniture. A dresser. Finally, I can put my clothes away. They're just stacked in piles of laundry. Uh-oh. The bear's here. The bear is here. The bear, Cocoa Bear. All right. All right, ladies and gentlemen, we are still beneath a gamma flip line. So it's going to be interesting to see where this pulls tomorrow. In negative gamma territory, this means selling but gets selling, buying but gets buying. You can see explosive moves in either direction. We're already at the weekly expected move for the week. Last week, we did the same situation. We kind of just chopped around it, okay? We're outside of the daily expected move. We're above a 5-day moving average. It's starting to flatten out here. My dog be nuts. I don't have a, yeah, I have a magic mouse. Let freedom ring. Short it now, Cocos. All right, so what's up with Tesla? Am I doing this? Did you guys want me to buy Tesla? Should I buy a share of Tesla just because? Just because, dude? Just because it's in a horrible trend? Watch me buy one share and you have like a 7 standard deviation move to the downside. Just something stupid. And that one share ends up being like a $400 or $500 loss. I mean, obviously it wouldn't be that, yeah, but you get my point. You get my point. $400 or $500 loss. How's that even possible? It went negative. It went negative. How did it do it? He bought one share and it went negative. Hey, oil went negative before. That was crazy. Chloe's like, no. Daryl's like, yes. Buy it. Don't buy it. Watch me not buy it and it goes up 7 standard deviations. And then I'd be like, dang it. I should have bought it. One share. That would have bought me so much groceries. Like over 2 bags of potato chips. What is up with ARK? Somebody just mentioned ARK. I actually liked how ARK was setting up here, but it never broke out. Nice little contraction here, but then it broke to the downside. So I'd be just waiting to see how this tightens up again. I had my eyes on this because it looked actually pretty good, even from the weekly time frame. Right, the averages were going up, and this was getting tight here. This was one that I was really eyeing to go long, but then it broke down. So maybe if it turns back up and resets up, maybe it'll give a new entry. But I mean, it did the same thing right here.
Italia, poorly EU antitrust regulators
could be just doing it again.
KKR Telecom Italia deal, viability of the wholesale market. TIT in Italy and
Dude, Romeo. My neck, bro. My necky. My back.
You send questionnaires to rivals and customers about the risk of
use the study and fingers probability of expiring cone. You can really? Oh, maybe I gotta go. I'll play around with that market. Probability of expiring cone. Oh, is that thing that kind of looks like this? Or whatever, and then you play you probably manually type in those expected moves or something like that, or you would look at the days. People coming here in like a few minutes. Coco's gonna go completely ape butt. All right, SPY is just still kind of just chopping around here, holding above the weekly expected move. We still haven't cleared this 510. I mean it, but take a look here. Take a look here. This is actually pretty interesting. Do you see this? It was here. It stepped up. Stepping up again. So you actually have supportive bids coming into this marketplace. And they're stair stepping into this kind of like concentrated area of liquidity. So you never know. We might be able, dude, we could clear this. We can go for it. Let's go for it, dude. Let's get in a rocket ship and let's just have some fun and explode. And let's all go back to the month to date lower expected move and let's all party. And then let's all party up here at the April Anchor VWAP and be like, yeah, dude, 5% down, whatever. It was the best opportunity ever. And then we'll just keep on celebrating, dude, until something bad happens. And then we'll stop celebrating, you know? And that's what happens. How's oil looking? Didn't even look at oil today. Ah, man, let's talk about some explosive moves. Nice consolidation here. Then we had this break, very crazy day here, and now we're seeing some follow through to oil. Is oil just turning around here? If oil is going to just turn around and continue to go up, man, that could be not the greatest look there. Maybe that whole reinflation thing is going to have some legs. Coco says bye. AMLP was oh man, yeah, this is a little bit too fast of a move, but I was watching this on this pullback. It's too explosive of a move back up. This AMLP bullish trend, I like to wait for consolidations, but these things pay like a pretty huge dividend. What's up, Light for You has followed on Twitch. Thanks for the follow, man. Thanks for being here. Or guy, gal, not too sure. But thanks for being here. Yeah, this is an easy day. You just buy dips for the most part. I mean, that's what happens in these these environments here. We don't have convergence right now, so you can have counter moves. We're just having chop right now, so. Kind of just holding that, holding about highs of day. But NQ is not. NQ is not holding highs. I mean, it's holding up there, I should say. Look at this little, look at this chop. Let's go back to bullish convergence. Maybe we get a little push up. Market's going to be awaiting Tesla. As Elon Musk was saying stuff earlier today to already pump the stuff. New Model 3. How is FDX after UPS earnings? I think decent. Yeah, that's good. Nice little pop today. It's holding up. I've never been once concerned about missing Tesla. Yeah, no. Kind of the same boat. It was kind of a dead giveaway with the whole Tesla thing when Elon Musk started commenting on monetary policy. Dude. What are you trying to tell me? You've been margin called. You're over. You're done with. She's like, go short, trust me. Go short, trust me. Margin called. Come here. You don't short into the hole, Coco. You cover. She added to positions and then got blown up. It's a very bearish sign seeing Coco here. Little tiny crazy dog. Thanks, Tulip. All right, y'all. Is there any other names that you guys want me to pull up here? We can pull up the last like expected move on Tesla, but I mean it's pretty dead for right now. A lot of consolidation right here outside of the weekly expected move. Market net flow giving us not much right here. Still bullish though. And then as far as zero date, 50.75 is kind of becoming more and more the pin, but still 50.45 is beneath us. So if we're going to get any price action, as it stands right now, if this stays no convergence and this remains the call wall, I mean, it makes sense to pull back in, but we're bullish right now. We're bullish. Okay. Give me a second here. Oh yeah, we got people delivering stuff to our house right now. Holy macaroni, that's huge. What is my wife ordering, dude? Bro, this is like 6 feet, 7 feet tall. What the... My goodness. Give me a second here. Yeah, give me a second. No, FT, you did not miss much. How was the pickup at the airport? That was quick, man. I gotta get you to pick me up, man. That was quick. All right, hold on. Let me get this dog. 1 second. All right, people. I'll be back in a second. I'm just gonna help them where to put this furniture and stuff. Almost there. Market looks like it wants to try to come get that 5110 area liquidity above us. Give me a second. Give me a second here.
next LAXT following the next shelf, Lima X-ray. So Lima India X-ray Tango LAXT. Recordati REC in Italy, reportedly CVC considering options for its stake in Recordati to sell its stake or look at a potential merger with a peer for Romeo Cotrelli in Italy. UNH Senate panel planning to hold a hearing on the cyber attack against Change Healthcare, Uniform November Hotel.
All right, y'all. How we doing? Sheesh, dude. They came and delivered it, but they rested it on the staircase and it dented our flooring on the staircase. Like, dude, come on. Just one thing after another, dude. One thing after another. Looks like we filled that liquidity up over here. And they keep pulling it up a little bit higher over here. So we're just kind of floating in and around that area. Not much beneath us, though. See if anything was happening in there in chat. I might be calling it a day. I don't think I'm going to wait until end of business to look at the Tesla stuff. Get some air, get out of here. Outside of the weekly expected move, still kind of pressing higher and still underneath the month to date expected move there. Got a little XOP gain. Nice, nice. Oh yeah, sorry. I had to go. Yeah, look at the furniture being delivered and stuff, and freaking, of course, the wall gets hit, the door gets hit, and our flooring gets dented. Of course. Why? I mean, why wouldn't it be? It's like, at least wrap it up in a blanket when you move it, you know? I had to supply a blanket there. White glove service delivery. Comes with a few dents and bruises. Oh, brother. AMD. What's AMD up to? AMD. Yeah, AMD was looking pretty decent, pretty tight here, but you got to respect it when it starts breaking down, and it's breaking down. Bigger volume breaks, big volume breaks. So now it's just kind of trading around in and around. I don't even care if this thing bounces a lot. I'm not touching it. Touching it until something actually legitimately changes. Tesla. Nice little pop, but it's kind of fading, just chop. See if anything's reaching out for zero date. Oh, 5075 is now the pin. And they are kind of reaching out here a little bit more, back to 50.85. So we're still there. We did gain convergence back over here, and we saw the market move up a little bit higher. It's up 1.25% for the day, and it's trading outside of the weekly expected move. Looks pretty decent. Looks good. I wouldn't be chasing up here. You know, if you think that you missed the move, I'd give it some more time. Even if it pops up a little higher, there's going to come a period of consolidation. Nice. Nice stuff so far. Taking a look at a couple of my positions on here. I've reduced my S&P 500, the leverage position. Still have a pretty decent size there, but a lot lower as the market's pressing higher here. $50.85 is SPX. Yeah, SPX. 50.85 would be SPX. You can look at CBOE. Oops. SPX from CBOE. 50.85 is up here. So we came into the 50.75 where that level was. 50.85 is just slightly above us. And, you know, based off of market net flow, I mean, it's kind of suggesting like we didn't want to rule it out because it's telling us that it could still potentially get there as long as we stay in higher convergence like this. So yeah, 50.85 could definitely happen. Where is that on the SPY? I mean, probably around up here. Connect back. Let's update net gamma. Gamma flip line actually updated. Gamma flip is now 5100, 5096. So we're not too far off from gamma territory for being positive. I mean, it was a strong move into it, and then we have potential resistance at 5100 on CBOE or on O1, the O1 chart. Okay, so NQ sitting still at highs of day, 1.66% up. Look at the S&P 500. Take a looky. Gamma flip line right over here. So in negative gamma, right? We've been in negative gamma for a while now. You get flushes to the downside, selling into selling, but you also get buying into buying, buying into buying, buying into buying. And that buying into buying right now is clearly shown on market net flow. Dang, let's go up there. Let's go to 5100 here on this chart. That'd probably be roughly around the on CBOE, the 50.85. Where are we at? 50.85. Yeah, still 10 points away. How do we know when we get out of negative gamma territory? You get above the flip line. So technically then you'd be in a positive gamma regime. And that's where dealers look to buy the dip, sell the buy the dip. Keep in mind that, you know, people's flip lines are, you know, different. It's how they aggregate their data, right? So it's more of a zone. Like, for example, like technically, like, and some people might say we're back in positive gamma territory right now. You know, some people might have that reading, or some people might be more north of 5100 or even higher. So think of it more as a zone. And when we get above, you'll notice because price action, like, you notice this.
Charlie Papa.
But we just kind of go off of this line and it'll tell us. So as long as we can hold above there, and it'll update through time with time. So that's good. This is good to see, like, coming back into trying to get to positive gamma territory, and then also back above the 5-day moving average that's starting to flatten out here. All this convergence down here. So like if you're bullish, I'd like to see a pullback at some point. Maybe not here, maybe later, or have these start to catch up a little bit, and then eventually consolidate and move around, and then play another trade. But you know, playing from down this range up to here is pretty good, and with no consolidation yet. The likelihood is still playing within the weekly expected move. We saw it pull in, pull out, pull in, pull out, pull in, pull out, pull in. A voice in the background is Trade the News. Live news feed. All of a sudden, you have something to do. What's NVIDIA up to? You're listening to Trade the News. Yep. NVIDIA came down a little bit, but look at, just swooped right back up. Daily time frame, we're back at the 5-day moving average for the 15-minute. Daily time frame, we're still trading within the prior day's candle. On Friday, the big break candle right here. And it actually broke some pretty significant level of prior support. So who knows what happens if it comes up a little bit further, if it turns and U-turns down or turns back down, or, we got to see if it breaks the high or breaks the low of this. Right now, we're just trading inside of it. And, we don't have earnings for a minute here for NVIDIA. Big earnings week. Big earnings week. Tesla's still chopping around going into earnings. All right. I think that's where I'm going to call it, people. Call it a day. I'm going to go maybe on a walk or something like that, get some air. We'll go look up ARM. You want to look at ARM? Okay, we'll look at ARM. Still trading within the first minute candle. Wait, the first minute, really? Yeah, still trading within the opening range of the first minute. Underneath the 5-day moving average, ARM did have a nice consolidation here. But we broke down, right? So it broke down. Expansion to the downside. Where did it come to? I don't even know what this was. Might have been an earnings expected move or something down there. Bounce from this level. So yeah, I mean, I don't know. You'd be entering into a pretty crazy move to the downside, and you have earnings around the corner. So yeah, can we potentially bounce up? But even if we bounce up, like, where's it going to go? Like way back up here, or is it going to go like this? Who knows what it's going to look like. So I would just wait for the contraction, consolidation like this. Didn't get a confirmed breakout, so it kind of negates the trade. And if it broke out, it could have been a nice big pop, but it just didn't. A lot of things broke down. That's what happens in these environments. In negative gamma territory and below a 5-day moving average. You get more fake outs, more breakouts, more breakdowns, right? Fake outs, shakeouts. All right, y'all. Yeah, I'm going to call it a day here. S&P 500 continues to press up higher. Market net flow supports this. Like I said, I wouldn't be shorting into this market at all. I don't care if it comes back down to the weekly expected move. I never stab into this type of stuff. If it's this bullish, you'd be fighting the market. You'd be fighting, you'd be fighting flow. Simple as that. Simple as that. Okay. As far as upside targets today, it'd be probably about that 50.85 there on the SPX. And then if I'm looking at a Wanda chart, be the gamma flip line in 5100 right up here. That'd be more the upside. Is it going to get there? I have no idea. Market's already moved quite a bit. Market net flow supports it, but we are coming into a prior area where we saw some resistance too as well. Okay, so if we break through it and manage to do that, cool, but then watch into this area. And then you have to be patient. You have to be patient and see how everything consolidates. I'll try to get out a movie tonight. Quick market brief. If anything, I'll try to post it to the Discord, but I'll try to get one for the whole YouTube as well. Okay. Going into Wednesday, got some durable goods. And then, yeah, just keep an eye on Tesla. If you guys want the Tesla numbers, I'll give them one more time, and then I'm going to sign off. Tesla expected move right now, 1436. Roughly right around there. About 160 and some change. 130 and some change there too as well. So this would be the expected move for Tesla's earnings going into the close. That'd be one standard deviation, okay? All right, y'all. Have a good one. Appreciate y'all being here. Till next time.